How much of it is to do with those Honhai?
Liquor stocks may show up as some of the drink makers here in Europe as well. And then lastly, we do have Alstom. They're coming out with their earnings story as well, reporting a third quarter total large orders at around $2 billion. Guy, we're going to see if that shows up at the open.
We're about to find out. It is time for the opening trade this Monday morning. First full-ish week of trading around the world in 2025. So let's show you some numbers. Let's get an idea of what is going on. FTSE 100, as Lizzie's been indicating, a little soft out of the gate. We're down by 0.1%. It's not a big move to the downside, but I think it's the relative trade to other European markets that will be important here. You can already see the IBEX up by 0.3%. The Stock 600, we'll wait for the other markets to come through. At this point, up by 0.1%. We'll see whether it gains a little bit of steam once we start to get an opening trade coming through in the CAC Iran to the DAX. We get more trades opening up there. CAC Iran's up by 0.4%. We'll see what happens with the DAX. We'll see what happens with the SMI as well. But a little bit of a closing of the gap with the US trade Friday, plus also a few little interesting stock stories that are floating around. What is happening in the drinks industry? What is happening in the chips industry? All relevant for the start of trading here in Europe this morning, Chrissy.
It's already showing up in some of those early trades. When you look at their top index contributors to the Stock 600, your likes of ASML, Schneider Electric, SAP over in Germany as well, even ASM, are all trading higher and contributing pretty significantly to the gains that you're seeing in the Stock 600. A pretty broadly positive day. When you look at the downside, though, a lot of it is kind of focused into the healthcare story. So the downside, Lizzie, I'm looking at Novo Nordisk, AstraZeneca, and a couple of others in the healthcare space. But it seems to be a tech versus healthcare story this morning.
Yeah, we also had Joe flagging to us Unilever. That is down 0.8%. RBC having downgraded the stock. It said its outperformance seemed excessive, and indeed you were seeing traders reacting to that this morning. You mentioned the drinks as well. Humi Cointreau up 0.6%, should we call it. You had seen alcohol-making stocks declining in Asia after that US cancer warning that you mentioned as well. But really, it is the tech names that we are lacking in London that are boosting the European benchmark.
And you mentioned the drink story. Diageo, we should point out, down about 0.6%.
So Diageo is down, but if you take a look at the back end of the Friday session, actually that's when the real drop came. So on a two-day basis, this stock is down by 4.5%. This morning it's down by 0.7%. So the big drop came. The interesting thing is we're not getting, initially it looked like we were going to get a little bit of a bounce off the close Friday. That has now reversed, tracking lower this morning. So Diageo down by 4.5%. We're also looking for some data to drop at the moment. Still don't see it. Spanish data dropping actually at 8.15. So we'll wait and see what the PMIs deliver at that point. But it's interesting. It's definitely tech and luxury driving things higher. Banks having a reasonably good day as well. UBS is tracking higher. BNP is tracking higher. Shell is also moving up by another 0.3%, Chrissy.
And we should mention that UBS seeing quite a bit of volume as well. I believe the shares rose on Friday.
Yep.
That one coming off of a major upgrade because some of that party continues today, at least in terms of volume. Let's get a little bit more market perspective here. Kareem Shadid, EMEA Investment Strategy Head over at BlackRock, joins us around the table. Good morning.
Good morning.
It feels like we need to talk about the tech story to kick off the market chat this morning because that's what's driving the markets. A lot of this coming from perhaps the on-high stories, coming, of course, from the Microsoft $80 billion AI investment that they're talking about on Friday as well. But is tech still the place to be in 2025?
So we're about to publish our investment guide, investment directions for 2025. And one of the big themes we have there is in equities, this leaning into US equities further this year. And part of that is the tech story. But we do evolve it a little bit. So when we think about tech, when we think about AI as a big return and earning driver in 2024, in 2025, we're really looking at the breakout of that. So what are the themes that are set to benefit from AI breakout beyond just those mega cap names, looking at AI infrastructure and looking at AI beneficiaries. And then when we think about the equity story in the US and how we continue to lean into it, it's an evolution of that. So S&P Top 20, which is really leaning into the scale in US equities, is something we focus on. But we also look at the S&P equal weight. If you look at the earning projections for the S&P this year, we're looking at 2025 earning growth expectations of around 12 to 13% for both the S&P 500 as well as equal weight. So that breadth theme could have some legs.
But that breadth theme that you're talking about in the States, does that apply to right here in Europe as well? The translation factor when perhaps American tech could get very expensive on valuation basis or even on a currency basis in the face of a strong dollar. Does Europe have some catching up to do? Is there room to run for the ASMLs, the SAPs of Europe?
I mean, if you look at the chart that Guy showed us from Friday, that gap earlier, just about the immediate term. But then if you look at that spread between European equities and US equities on a 20-year basis, so even the very long term, you'll see that there's also a very big gap. The European equities were up around 9% in 24, S&P 500 US equities are up 25%. So Europe did show positive performance, but it is lagging. There's no doubt about that. To answer the question, can that gap close? I think a lot of it lies in dispersion. At a broad index level, Europe could continue to struggle because of macro headwinds. So growth and inflation are not looking as positive as they are in the US. Part of that is seeing how the ECB is likely to continue cutting rates back to back when the Fed is not. But then the answer is really in dispersion, because European equity dispersion is at the highest level since 2009. So there are opportunities in European equities. You just have to go and pick them.
Where? Let's talk about the regions of Europe rather than the sectors. Where do you find opportunities in Europe?
On a regional level, obviously, we've got the PMI final reads today, but on a regional level, we are seeing an interesting green shoot continuing to come through from some of the economies in Europe, in Italy, Spain, so in Southern Europe, when the core, as we call it, German economy is still struggling a bit, especially that manufacturing powerhouse continues to be in somewhat of a stagnation. So that's on the regional. On the sector level, I think there's interesting opportunities in areas like luxury, but even there you have to look at dispersion. So luxury, but with stock picking hat on.
So 2025 may be the year of the periphery in Europe. What about the UK? Is it actually in a good position given the potential trade war going on that, we've had Brexit and the UK is setting its own tariff policy?
So UK is a bit of a mixed bag. On the one hand, we're starting to see that growth impulse weaken. Now, obviously, that provides a tailwind from a central bank perspective because the market pricing for the BOE rates this year is not too dovish, so there's room for the BOE to deliver, which creates some opportunities in the gilts market. Now, on the equity side, one of the interesting charts on UK large caps, so FTSE 100, is that their trade vulnerability is actually quite limited. So the trade beta of UK large caps is one of the lowest trade betas compared to other developed market equity indices, which positions it well from a tariff and trade war perspective.
Give me another sneak preview into your outlook. If I am a little concerned about what is happening with US stocks and I'm looking for a diversifier, what is my diversifier?
So, yeah, that's a great plug because we actually dedicated a whole theme to the...
It's almost as if I'd read a little sneak preview.
Exactly. A diversifier theme. And I think there's diversifiers and there's return enhancers. So from a diversifier perspective, it's really looking at the market neutral strategies, so looking at a sleeve in liquid alts, hedge funds. So that's one...
Not bonds.
Well, bonds are good for income. And one of the themes this year, as we look at the Fed pricing, which has come down quite a bit around rate cuts, so we have much more modest rate cuts priced in this year than last year. High rates for longer is a theme, and bonds are going to be a good source of income this year, as they were last year. But from a ballast perspective, we have to think a little bit harder on the diversifiers because that stock-bond correlation is unreliable. Look at what happened in the past 3 weeks, for anyone who was around the holiday season, stocks and bonds fell at the same time. So when we look at the diversifiers beyond bonds, we look at the liquid alts, the market neutral strategies. We look at scarce assets like gold. Gold and silver had a very good year last year, 25, 21% respectively. We expect that to continue to be in a positive light. We've started to see the investment community buy gold, and ETF flows have really started to pick up.
Should I be looking for diversifiers? Should I be worried? Is the risk growing that we are going to see a meaningful correction in US stocks? We didn't seem to have one last year in a big way. What does 2025 look like? Is there going to be greater volatility this year? How bumpy does 2025 look like? I haven't actually read that bit, so tell me which bit that comes in.
So in a typical fashion, I think there's two hands here, two arguments. So on the one hand, US stocks have been powered by good earnings last year, and we could still see positive earnings this year. In Q4 reporting season, which is about to begin, earnings expectations have come down. So the bar is low to clear. We saw that in Q3. We went into Q3 with depressed earning expectations of 3%, and the market managed to deliver 7% earning growth, and that provided a tailwind for US equities, and that could happen again. So that's the positive side. On the negative side, that soft landing pricing from equities is getting challenged. So we have this environment where the Fed is not going to be cutting.
By a hard landing or a no landing?
Mm-hmm. Well, we don't have signs of a hard landing per se. Macro indicators remain fairly constructive, especially for the US economy. And so that's reassuring. But you could still have those periods of choppy trading where you have markets having to get adjusted to higher inflation for longer and higher rates for longer.
So the probability of a hard landing that you just read out and the choppy trading, you said you can still make money on bonds. But if you're talking about an inflation uptick, why would anyone own bonds right now?
So if we look at the past couple of quarters, duration got hit, and we do remain cautious on duration in 2025 as we were in 2024. But it's also mattering where you own your bonds. So if you own the front end and the belly of the US Treasury curve, which are the segments that we like, you can still get good carry because the yields are relatively elevated, and it's more stable than the back end where we're expecting higher term premium to be demanded by investors. And so that's one area. And then if you look at credit, for example, it held up decently well, also from a carry perspective, despite the hits in duration. So from an income, from a carry perspective, there are a lot of opportunities in bonds. And as our fundamental fixed income colleagues always highlight at BlackRock, you can get a good mix of high quality income without taking too much risk in today's fixed income market. And that, especially with an unconstrained strategy approach, is an opportunity.
Karim, great to see you. We'll look forward to reading the full report. Thank you very much indeed for coming and giving us an early preview. Karim Shadid, EMEA Investment Strategy Head over at BlackRock. Thank you very much indeed. Quick look at the core six. What's happening in terms of the centre of gravity here in Europe? You can see tech is up, luxury is tracking a little higher. Nestle is softening, continuing to soften, down by 0.5% this morning. Quite a decent drop in Novo Nordisk as well, so pharma under a little bit of pressure. Let's dig into the details of the European trade. We're 12 minutes in. What has Joe Easton got to tell us?
So we got some big moves in the chip stocks today, Guy. You mentioned that strength in tech. All of that seems to be coming through from the semiconductor stocks. Remember that story around Apple spending $80 billion potentially on data centers in the fiscal full year. That does seem to be the key driver. Also, that report of better than expected sales from Honhai, which puts together the phones for Apple and also some Nvidia products. Those two elements of news, so really pushing those stocks higher. We're seeing some decent gains in those. Infineon up almost, well, up 4% now, and also ASML nearly the same in terms of the moves there. In terms of those drinks, that is a two-day story in the drinks makers. As Guy was mentioning, those stocks did fall on Friday. So even a little bit of a rebound coming through in Campari, very small, but most of the move was on Friday. Apart from Royal Unibrew, now this one actually does have a rating downgrade, so that seems to be the one on that. Barclays cutting that stock today. Then in terms of Alstom, we got some orders from the French company. They're talking about their metro link and also some airport concessions as well, doing well for them. So the orders coming up nicely on that one, up 1.7% for Alstom in terms of the stock. Analysts saying that looks pretty solid today. Then in terms of the ratings, analysts doing their best to keep us busy. There's the RBC one that we flagged earlier on Unilever, so that stock coming down 1.5%, some decent downside on that stock according to RBC. Then Rolls-Royce gets a very rare downgrade after a massive rally for that stock. That's one of the best performers in London over the past couple of years. Downgraded at City, they say the valuation is too punchy, and that stock falling at 2.4% today. Decent move in that one. Finally, analysts at Bernstein have a massive note on European capital goods today. They've downgraded ABB in Switzerland, but they've upgraded Rexel, the wire products maker and supplier to construction. So that one gaining 2.7% in Paris. Bernstein has a big note. That'll be on the terminal soon. Keep an eye on those cap good stocks today.
All right, Joe Easton from our equities team, we thank you. I mean, it's a sign of how quiet it is that the two biggest drags on the FTSE 100 today are those analyst downgrades for Rolls-Royce and Unilever. The FTSE 100, kind of the anomaly here, down 0.1%, whereas it's a sea of green for the rest of European equities.
Low chip sort of impact as well in London, which is a factor. Rolls has had an incredibly strong run. Maybe that's started to roll off a little bit, to excuse the pun. So you may be seeing an impact coming through there. Unilever's a heavyweight on the market, so some weakness coming through there. I think this is the first significant week that we are seeing. We're obviously going to see the closure for Jimmy Carter's funeral later on this week, so it's not a completely full week. But nevertheless, I still think people are trying to figure out exactly what the narrative is going to be. And I'm going to come back to what we talked about last week, which is I think we have to wait until the 20th until we start to get an idea of what really is happening here. I think we're just kind of playing around at the moment, looking for a narrative, looking for a sense of direction. I don't think there really is a clear one at the moment. And I think it'd be interesting. We're going to talk to Peter Tubowitz about this a little bit later on. Like, how quickly do we get clarity and the end of uncertainty?
Well, it's interesting that we're seeing this tech space as well. Maybe perhaps the clearest space where we do have a little bit of that clarity. And I should mention, just as we were getting through the stocks to watch, Joe Easton did actually mention Apple's at $80 billion. I think he meant Microsoft, so just issuing a quick correction there. In the meantime, as we were chatting, we did get some inflation numbers coming out of, some PMI numbers coming out of Spain as well. December services rising to 57.3 versus 53.1 in November. A little bit of an expansionary.
Tourism is a really big factor at the moment. So you smile, because I know that you're a huge fan of Spanish tourism. But
I like to contribute.
Americans more broadly like to contribute. So Spain's been a really big beneficiary in some ways of the US exceptionalism story. American consumers are in great shape at the moment.
Sorry, Kareem Shadid talking about that periphery story of 2025, which I'm sure you'll be all over, Critty, but Spain really benefiting as you see the weakness in Germany and in the core.
It has, and I think it's really interesting. Tourism is 100% a really, really big part of it, but they've also really tried to reorient their economy to other parts of the world. So, for example, I'll just give you a figure here. 90 billion of their kind of revenue came from tourism. 100 billion came from other services. That includes financial services. That includes digital banking that they are now offering to the rest of the world. And that's where you can fold into the likes of the AI story a little bit, pushing away from manufacturing, trying to hedge against some of the maybe China reciprocity in terms of pork imports and tariffs, et cetera. I can go on and on. But I think what you need to know right now is that the services numbers, the PMI numbers, did come in pretty hot. The composite PMI rising to 56.8, 53.2 in November for that period. Some strength in the euro as we get those headlines. Coming up on the program, we're going to stick with a little bit of the tech story here. On High reports a sales beat as demand for AI infrastructure shows no sign of letting up. We're going to discuss what that means for the European chip sector next. Stick with us. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We're 20 minutes into today's session, and you're looking at the Euro Stocks 600 higher a 0.1%, just eking out gains. But really, it's the CAC 40 that's racing ahead, higher 0.6%. But the FTSE 100 there in the red this morning. We've talked about the China weakness. Maybe it's also because of a lack of tech names, and that is the tech names elsewhere, the likes of ASML, benefiting from the Hon Hai results. So let's dive into those. Hon Hai reporting better than expected quarterly results, boosted by stronger demand for AI infrastructure. We can get more now with our Asia technology reporter, Jane Lanhee Lee, who joins us from Taipei. Jane, good morning. Just break down these results for us from Hon Hai.
Right. Well, these are not really quarterly earnings reports, but Taiwan companies report monthly sales. And based on that, the fourth quarter sales was much better than expected. It's up 15% year on year versus 13% estimates by analysts. That was a bit of a surprise in a sense, because October and November sales were, grew by single digits, and then suddenly in December we had like a 40% plus growth. And so that, I think, gives investors a bit of breathing room, because everybody's wondering how long this AI investment boom will last. So some good news. Plus, Hon Hai is saying that first quarter it's expecting significant growth. So hopefully some more good news for 2025.
In terms of the good news that could be coming, does it come from the server side of the equation? Is that really where the strength is going to be?
That's absolutely right. I mean, Hon Hai has long been known as the iPhone maker, the Apple supplier. And it said in its last earnings conference call that this year, the division that houses the AI server business would match the sales of the business division that houses the iPhone. So that makes that brings a lot of diversification for Hon Hai, which traditionally has been relying a lot on the Apple sales. And, we've even started to headline it as the NVIDIA AI server maker rather than just calling it the iPhone maker.
Well, that was the question I was going to ask you, Jane. This idea of kind of diversification away from the Apple Store. You mentioned even NVIDIA, but it kind of runs into the same issue at a time when it feels like tech companies everywhere, OnHigh included, Foxconn included, are really looking at things like cars, looking at infrastructure, looking at data centers. How is OnHigh diversifying?
Well, in addition to pushing big on the AI server business, it is trying to also get into the EV car making business. But that business has so far not had much traction. I'm waiting for a big customer name in the US this year for their EV contract manufacturing business. That's not so far come. We've reported out also that there was interest from OnHigh to have a tie-up with Nissan. It's so far backed away from that for now, as Nissan and Honda are having a tie-up. So it has been looking very actively to diversify its business away from just being the Apple manufacturer. It's succeeded so far, it seems, with the AI server business, but it's looking for other areas of revenue to diversify that revenue stream.
All right, Asia technology reporter Jane Lanhee Lee joining us this morning to break down those OnHigh numbers. We thank you so much. Of course, already showing up in some of the European price action as well. You're seeing the likes of ASML, SAP, and of course the others also higher this morning. Let's go to another sector. Oil steadying near its highest level in almost 3 months. Saudi Arabia raised its official prices more than expected. Bloomberg's Stephen Sebzinski is all over the story. Stephen, walk us through these price hikes.
Yeah, so the price increase for Asia is Arab's light crude, which is the main form of Saudi Arabian oil, going to the biggest customers in Asia. They hiked it by about the equivalent of 60 cents a barrel. The market was expecting a 10 cent hike. So this is a bit higher than was expected. There could be a few reasons for this, one of which physical supply coming out of Russia and Iran has been tightened either through sanctions and crackdown on the shadow fleet. At the same time, perhaps there's a bit of a rosier picture that Saudi Arabia is seeing from Asian customers as they look to replace those flows potentially lost from both Iran and Russia. That could be one factor there, but it does show sort of a counter. The oil market is not as straightforward as you would think. I think going into this year, everyone was talking about an oversupply weakness, how the market is not really seeing strong demand out of China, and how the U.S. is pumping output quite strongly, and OPEC Plus is waiting, holding off to really add more barrels into the market and unwind their production cuts. But this does show that there are bright shoots and there are bright spots, and potentially the market isn't as oversupplied as initially seen, as you can see from this Saudi Arabia increase.
Steve, very quickly, it's cold outside here in Europe. Gas seems to be going out of the door, out of storage very fast. Are we going to have a problem? Just briefly.
Okay, so storage has dropped between the peak to today by the highest level since 2018. That's an alarming number. Gas prices are higher than normal. They've jumped, but they're not at 2022 levels. We're not in a crisis per se. We're expecting higher prices, but don't expect a 2022 level jump in gas prices.
Stephen, thank you very much indeed. So we're going to go from gas to steel next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The amount of steel that we're capable of making in this country today, we made 30 years ago. There's been a lot of technology changes. There is a lot of changes in the way we do the work, but there's also lots of changes in their equipment and in the materials and how we make steel. So we're very capable of making the steel that we need in this country. Actually, the demand is higher than our capacity.
David McCall, the United Steelworkers president, speaking there to our very own Romaine Bostic and Alex Steele over in the States. This is all in the context of that Nippon Steel offer for U.S. Steel that got completely nixed by President Joe Biden on Friday. Now, this is crucial because this really brings up a lot of questions of national security, this America First agenda. But for a moment, I want to focus in on how steel actually is produced around the world. The major player is China, whereas U.S. Steel used to be the dominant player, the first billion-dollar company in the world, creating the steel for bridges, skyscrapers, etc. It is now China that's very much in the driver's seat. Under that's India, Japan, then the United States. And even within the United States' steel capacity, you are still only seeing U.S. Steel as one of the minor players in that story, which brings us to the question of why this is such a big national security issue and some mixed opinions from within Biden's inner circle about what that actually looks like. Fears of repercussion, fears of consequences, of fallout, of creating those national security concerns around Japan, a major ally. Let me just walk you through some of the narrative. Janet Yellen, for example, the U.S. Treasury Secretary, reporting that this could have an effect on foreign direct investment from Japan into the United States. Rahm Emanuel, the U.S. Ambassador to Japan, of course, a long-known politician over in the States as well, talking about defense fallout as well. What does this mean as Japan is positioned to help with the U.S. naval system in the South China Sea, and specifically as a key ally against China as well? But then you have the other side of the coin. Catherine Tai and Jennifer Granholm, the U.S. Trade Representative and Energy Secretary, respectively, also saying this is absolutely crucial for the energy security story, talking about keeping that production capacity in-house in the United States. But I think the key theme here, does that America First agenda actually mean for the global fallout? Let's bring in a true expert on that very question. We're joined now in the studio by Peter Trubowitz, Professor of International Relations and Director of the Phelan U.S. Center at the London School of Economics. Peter, pleasure to have you on the program.
Great to be here.
Let's start with that very question, this America First agenda, which we've seen through Nippon Steel, which we're going to see later this week in the TikTok appeals hearing for the Supreme Court. How does this have a ripple effect to the rest of the world?
Well, I think one of the implications of all this is that friendshoring has its limits. This is something the Biden administration has stressed, the need to work very closely with America's allies, and this decision really cuts the other way. It erodes or undermines or tests the credibility of that commitment and that policy. And, you know, I mean, it's quite interesting that it was so divisive inside the administration, where there really were two camps. And at the end of the day, I think Biden, who has had long-standing ties with labor, just couldn't bring himself to embrace a policy that would essentially concede or give away one of the kind of symbols of American labor over the course of the 20th century.
But Peter, at the end of the day, it is still just a symbol. U.S. Steel hasn't actually been doing a lot. That's just one example. But taking it with a kind of big picture lens, if we can, Donald Trump is about to be the new president. He shares a lot of the same feelings about these national security stories as Joe Biden does. How does the rest of the world prepare if this kind of question of alliances, even in the corporate space, are under threat?
So I think what the rest of the world is doing is taking a deep breath. They recognize that Biden essentially heard Trump's footsteps and that this is the direction of travel right now in the United States. It creates an opening for China as well, really, to start to try to work or peel off, to some extent, America's allies. There's a great deal of concern about Trump, not only in Europe, but in Asia. And Xi Jinping, who's got his own economic problems and is going to be worried about the impact of, Trump's tariffs on China if he makes good, nevertheless if Trump makes good on him, nevertheless we'll see an opportunity to double down on globalization with the rest of the world, and I think, ironically, with America's allies.
Well, speaking of China, we've got the UK Chancellor of the Exchequer, Rachel Reeves, and the Bank of England Governor, Andrew Bailey, off to Beijing this week, just ahead of Trump's inauguration. Is that wise?
I think probably, because it's unclear where Trump is going to land with respect to the UK. I mean, given the direction of travel or rhetoric that's coming out of Mar-a-Lago and Elon Musk and, the kind of the coterie of Trump trade advisors, it doesn't look like the UK is going to get a trade deal with the United States anytime soon.
But how would you handle Musk if you were Keir Starmer?
Carefully. I mean, Musk is a problem not only for him, but for the German leadership and so forth. Musk is trying to expand his remit. He's apparently a problem for Nigel Farage as well. So, Musk is an issue, I think, for foreign leaders because he represents part of, he's not a clear American firster, but he nevertheless are part of the kind of strong MAGA coalition inside, under Trump's umbrella. He represents the alternative wing, I think, which is wealthy tech corporate types who are not going to line up behind Steve Bannon's position, let's say, and on immigration or on tax cuts. Well, on tax cuts they will, but not necessarily on China.
Peter, when are we going to get clarity on the Trump agenda? Nobody seems to know really what that is going to look like at this point. Does he? And are we going to get it on the 20th?
I think Trump right now is trying to figure out which direction to go. So there's talk of going either with two bills. So Trump's agenda basically consists of two parts. The border, fixing the border, in quotes, and secondly, tax cuts, or extending the Trump tax cuts from 2017. And initially, the idea was to separate these two, to go for the border quickly and fixing the border because there was no opposition inside the Republican Party on that particular question. But given the vote over the Speaker, the contest over the Speaker, and the contest that occurred a little over 2 weeks ago over keeping the government open, what it's underscored is that Trump won an impressive victory, but he has no mandate. He had no real coattails from that election. He's working with very thin margins in the House, the thinnest almost on record historically in the United States, There's one exception to it, and with relatively thin margins in the Senate. So the idea is if you put the two bills together, he will be able to create more negotiating room to construct some type of deal. The downside of doing that is it extends everything. The negotiating out the extension of the tax cuts is going to take time. And so he will be lucky if he has a bill by April. This is past the normal 100 days. You celebrate and so forth. Okay. It could go beyond that into the summer. It also gives those holdouts in the House the kind of, the tough on the deficit hawks leverage over Trump going forward.
So we have to wait potentially until April before we get those two aspects.
If he puts them together.
If he puts them both together. He could do them separately. Maybe he goes through immigration first and gets an earlier win, which may appeal.
Momentum, right.
And the momentum, as you say. If he does decide to put them together, he doesn't need the House to do tariffs.
Right.
He can do that on his own. Are tariffs an end in themselves for Trump? Because this is what the rest of the world's trying to figure out. Is it a negotiating tactic? Does he want something else? Is there a means to an end here? Are they a means to an end? Is there a bigger objective? What do you think he's going to do on day one with tariffs? How quickly are we going to see this narrative unfolding?
So I think the answer to your question is kind of all of the above. That is, Trump has been talking about tariffs since the 1990s.
Sure.
So this is something he's deeply committed to. That and getting NATO allies to, spend a bit more money. So those are two very consistent, principled positions. But I think kind of more generally speaking, I think what Trump believes is that America's greatest asset is its market. It's huge. Everybody wants access. Why not leverage it? That's his position. And that's something that American presidents did not do, at least in a kind of brazen way in the past, or at least not in the recent past in modern American history. And so I would not be at all surprised if Trump on day one imposes additional tariffs, let's say on China and other countries.
Europe?
But he has, possible. He has many things he can do. There are things he can do on the border on day one that are more like kind of show, and I would not be surprised to see that. He will roll back a number of the things that Biden has pushed through in executive order. So I expect we'll see on day one a flurry of activity, some of it, maybe much of it, very symbolic. But the tariff stuff is not symbolic.
Yeah.
It hurts.
For the international agenda, Mike Johnson seems to have survived this vote on Friday now.
Yeah.
What does Trump need Congress for?
He definitely needs Congress to be able to extend his tax cuts. And if he really wants to make good on his pledge about the border and fixing the border, he needs Congress.
But those are very much domestic stories. For the international agenda, for the tariff story, for restrictions, for banning on the stock exchange, those kind of things.
But this is why it's important, because if Trump cannot pass legislation, then Trump looks weak internationally. It means that he cannot carry Americans with him. It means that there is enough resistance, ironically, within his own caucus, within the Republican conference. So those are important. And, for Trump, I think this was one of the problems with Trump's first term. When you look back at it, he passed very little programmatic legislation. The big thing was the tax cut. It took him almost a year to be able to get that through. That sends signals to internationally that there's a limit to the president's kind of authority, power, and clout.
But how limited is he in his relationship with Musk? You've got people joking about Musk being the president-elect.
Yeah, so, I think the question there is I think that's probably one narrative that Musk doesn't want, because Trump doesn't like competition. I think this is, for airtime, I think this is complicated for him, where Musk is very valuable to him in many ways, it seems. Certainly he bankrolled, in a significant way his election. Musk has a megaphone in X.
Yep.
And he's the richest guy in the world. So, and to Trump, I think that means something. I mean, Trump looks like he's a pauper compared to Musk. So, But, you know, the problem is that Musk, I mean, we've already seen over the visa question, MAGA firsters, true believers push back against Musk and go after him on X and other platforms. And so there's a real potential for conflict and division inside the Trump administration over immigration and I think on the question of China. I don't think Musk is where Trump is on the question of tariffs on China.
Do you think Musk's support for right-wing parties in Europe is backed by Donald Trump?
The way I view this is Musk is following up on the ripple effects, the wave, really, that Trump's election caused in Europe. I mean, Trump's election stoked the right wing in Europe. Viktor Orban called it Trump's election as an accelerator to history. And I think what Musk is doing is playing on that, is following up on that by stoking or supporting right-wingers, whether it's AfD in Germany or, Reform UK, perhaps without Nigel Farage in the UK, right? So, hey.
It's amazing to watch what is happening here. Peter, great to see you. We'll have you back very shortly. Obviously, the next few days are going to be interesting as we build up to the inauguration of Donald Trump. Peter Tribowitz, Professor of International Relations at the London School of Economics. Let's turn our attention back to the United States. Mourners have been paying their final respects to former U.S. President Jimmy Carter as part of a 6-day state funeral. He is lying in repose at the Carter Presidential Center in Atlanta, Georgia. You're looking at live pictures now. Carter will then be flown to Washington on Tuesday, where he will lie in state at the Capitol for a funeral service that will take place on Thursday. The former president died last month, age 100.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in now a GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
As we spend some time here on the broader presidential race,
let's focus in on European politics. you wonder how politics might play out.
I would not want to see further slowing in the labor market. So while we do absolutely have to continue to get inflation down to our 2% target, we have to be resolute about that. We have to do it in a thoughtful manner so that we can also support the full employment.
That was, of course, San Francisco Fed President Mary Daly, no longer a voter. I think it's just worth referencing that. So the Fed controls the front end. The back end, that's a completely different story. The shape of the U.S. curve has been changing significantly over the last few months. And in the last hour, the U.S. 30-year has climbed to its highest level. We're talking about the yield here since November 2023. How significant is this? The shape of the curve is changing. Valerie Teitel is here to talk to us about what happens next. And?
Look, it's funny to see this move in the Treasury market happen, and my concern necessarily isn't anything about U.S. related. It's about the global effects of U.S. yields being higher. Think about the U.K., for example. Their gilt market very much swings around with the Treasury market, and they've had 2 months back-to-back of no growth. Meanwhile, their nominal interest rates are above 5%, right?
Transmission doesn't work because the Bank of England can be cutting rates. Doesn't matter.
Yeah, it doesn't matter if the U.S. economy is outperforming, especially outperforming on a global basis. You know, the worry now is these indebted global economies who aren't growing. Think about Europe, for example. In France and Germany, it's igniting political turmoil. And then you have here in the U.K. the same kind of story. So it's interesting to see this steepening of the curve in Treasury yields, all about fundamentally a good story in the U.S., right? There are upside risks now to growth, which is very much what the long end seems to be reacting to. You've got a U.S. economy still going strong, some further government spending coming its way, increasing the supply of treasuries. But these heightened treasury yields really, you know, over the course of this year could pose a problem to other economies who just aren't growing.
So as we look at all this U.S. eco data out this week, does it buttress the idea of U.S. exceptionalism?
Look, we'll see, right? I think many of us have gotten very excited about the prospect of a U.S. economy running above trend this year. Maybe we're vulnerable to the first data point, which shows something very different, right? If we get a weak payroll report on Friday, or if we get ISM services coming in weak, maybe we'll see this vulnerability play out. You know, there have been a lot of people piling into dollar longs. Perhaps at the first sight of some data that isn't so hot, we see a outside reaction in the market, perhaps maybe see a bout of dollar weakness, which I'm sure many around the globe will be happy to see. But I think that's where the vulnerability lies here, this positivity around the U.S. Exceptionalism, the U.S. growth versus around the world. Does the deficit matter at all anymore? We're talking about kind of extraordinary measures that might get kicked in this week or next week. Does that actively change the funding picture? So it doesn't necessarily matter in a negative way now because the U.S. is still growing, right? You think about how nominal interest rates and nominal growth, right? If you're growing more than your average interest rate, then your debt pile doesn't increase. So as long as the U.S. continues to grow strong, I think the bond vigilantes might not be the first to attack the Treasury market. What they will have their eye on is other economies around the world who aren't growing above their nominal interest rate, which I mentioned here in the UK. We're going to have that problem over in Europe as well. So, for now, the growing deficit in the U.S., as long as this U.S. economy holds up strong, I think the worries over let's say the paying your coupons on your debt, those kind of worries will sit at bay for now.
All right, Bloomberg's Valerie Teitel, we thank you. And let's dive into some of that data that we'll get from Europe. German inflation numbers due out at 1 p.m. London time, and that data expected to show an uptick. We can get the details now from Bloomberg's Alex Weber. Alex, what are we expecting from these numbers as we look at lots of inflation reads from Europe this week?
Exactly. So for the German number today, the consensus for an uptick to 2.6%. That's up from 2.4% in November. core inflation, we're not going to get a number with the early estimate from the German Statistics Office, but analysts expect it to have remained broadly stable. So this is all on the back of rising energy costs. Remember that in the fall of last year, we saw really low inflation figures because of statistical effects of huge volatility in energy costs over recent years. That effect has been reversing for the last few months, and this is going to be a continuation of that. So on the one hand, nothing to be immediately worried about as a central banker, but also shows that the task of getting inflation back to the target is not yet complete.
Talk to me about the inflation picture in Germany beyond December. What does the data look like this year? As you look out, what does the picture develop into?
So first of all, at the beginning of the year is always a kind of a critical period because prices reset, a lot of contracts are renegotiated, and there's also political measures like the Germany-wide transport ticket that was introduced a few years ago has been having a big effect on inflation, and the price of that is going to rise in January. So we're not gonna see an immediate fall in inflation. For the Bundesbank also expects inflation to average only 2.4% over the whole year, so not a massive progress from last year's 2.5%. So for the euro area, the ECB expects to hit the inflation target of 2% at the end of this year, and this could also be in the store for Germany, maybe a bit later in 2026.
Very quickly, there's been a narrative in this market about whether or not you import inflation from the States, whether you import deflation from China. Where does Europe stand in that tug of war?
That's really an open question at this point. It totally depends on what kind of tariffs are introduced, and then also what does it mean for China, just to explain. So if the US shuts itself off from Chinese imports and all of those goods are redirected to Europe, then that could really have a downward impact on prices here. So that would be hugely disinflationary. On the other hand, you could also see a scenario where the countermeasures taken by the EU increase prices in the Eurozone. So it's really a big open question that the ECB will have to look at this year. It's really too early to tell. And then also the depreciation of the euro could play into this. If the euro depreciates towards parity with the dollar, even below, that could increase import prices and also have an upward impact on inflation here.
1-3 handle on your dollar as we speak. Bloomberg's Alex Weber in Frankfurt. We thank you so much for joining the program. Let's get a quick check on some of the market movers here. Of course, tech seems to be a big theme, a double whammy or a double boost perhaps from the on-high story over in Asia, plus the $80 billion that Microsoft has pledged when it comes to the fiscal spend of 2025. So you are seeing some major movers to the upside here. ASML is just one, SAP is another, but you are seeing it across the chip sector, Guy.
So a bit about defense stocks. So defense stocks have had a very strong run, and many anticipate that may actually continue into 2025. The stocks, though, are showing a little bit of sign of weakness, as you can see this morning. It's interesting, Joe was flagging this a little bit earlier on. There's a note out from Citi. The prospect of peace in Ukraine could derail sector valuation, Citi says. If this happens, we would regard it as a significant buying opportunity. There is potentially significant defense spending coming through as Europe retools. Is that going to be impacting these kinds of names? That story is certainly one that's going to develop throughout 2025 as Donald Trump enters the White House. That wraps things up this Monday. Francine is back. The Pulse is next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Well, Canadian Prime Minister Justin Trudeau reported to be planning to resign as early as today following months of pressure from within his party. As the U.S. prepares to certify Donald Trump's election win, we ask what his return to the White House means for markets and world politics. Plus, Austria is on the verge of a government led by the far right after centrist parties tried and failed to form a coalition. Well, good morning, everyone. Let's take a look at the European markets map. First Monday, happy Monday. It's the first Monday of 2025. And there's quite a lot going on as we try and figure out the way forward for inflation and, of course, what Trump 2.0 means for stocks, but also world politics. The picture is one of gains and losses. So we're seeing quite a lot of volatility in today's trade session. We saw that in Asia. We're filtering through that to Europe. So you can see the CAC 40 gaining some 0.7%. The FTSE actually started the day a little bit higher, but is now pretty much flat. The DAX getting some 0.4%. Again, I guess investors are snapping up some pretty buoyant chip shares. The other couple of things that we need to watch out for, the 30-year yield in the U.S., probably the big one because it rose to the highest since 2023. S&P futures getting 0.3%. Look out for euro dollar, and there's quite a lot going on with China trying to support the currency. You can see actually renminbi 73289. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Canada's Globe and Mail says the Prime Minister, Justin Trudeau, is expected to announce his resignation as Liberal Party leader this week, triggering a contest to replace him. Let's bring in Bloomberg's Katya Dmitrieva. Katya, walk us through, first of all, good morning, but walk us through the challenges that Trudeau has actually been facing.
Yeah, absolutely. I mean, this is really just the latest in a series of political missteps and turmoil that has really gripped Trudeau and his party for the past few months. We're getting this reporting from the Globe and Mail, from Reuters, that Trudeau is likely to resign this week, and in fact could be as soon as Wednesday. Now, Wednesday is when the Liberal Party MPs have their caucus meeting, so that's could potentially be happening in the coming days. Now, this is sort of the latest culmination of what Trudeau has been facing, and that's included kind of historically low approval ratings from Canadians as well as from members of his own party. I mean, back in October, you had 24 Liberal MPs, those are MPs from his own party, signing a document saying that he should step down. Following that, Chrystia Freeland, that was his former finance minister, resigned in a very public move, citing an open letter to Canadians on Twitter, and saying that they had a complete mismatch in how they want to guide the country, but more specifically in terms of like fiscal spending, in terms of the post-Trump or Trump era, and guarding against that. And then in addition, since then, we've seen a lot more members of his party coming out. And should also note that his party is not doing very well favorably. There was a poll that came out showing that if there was an election, that Conservatives would handily beat them.
So, Katja, how much of this is actually down to Donald Trump's impending return to the White House?
Yeah, it's a very good question, and that is a big part of this. You know, in a lot of ways, this tension and this turmoil has been building for some time against Trudeau, but Trump was really the proverbial straw that broke the camel's back. You know, his announcement of tariffs against Canada and Mexico, but of course against Canada. The U.S. is I'm Canadian, but it's the largest trading partner for Canada, and so that took a pretty big hit. And it was after that Chrystia Freeland had resigned and said that it was actually the approach to Trump and the approach to tariffs and the America First policy that drove this sort of divide between Trudeau and between Chrystia Freeland. So this issue will continue for Canada. Of course, we have the inauguration January 20th of President Trump. For his part, so far, Trudeau went down to Mar-a-Lago. He met with Trump. He had a phone call with President-elect Trump after the announcement of these 25% tariffs. And so it kind of remains to be seen how any leader would really deal with President-elect Trump.
Katja, thanks so much. Katja Dmitrieva there with the very latest on Justin Trudeau. Now, for more on the markets, we're joined by Seema Shah, Chief Global Strategist at Principal Asset Management and Bloomberg's Justine Ali. Happy New Year to you both. Thank you so much for joining us. Seema, I mean, I guess the concern is that it feels like a politics story, but it's never a politics story, right? Are we going to see a lot more politics entering your world as we try and figure out Trump 2.0?
Oh my gosh, I think politics has to be in every single consideration that we take this year, which is a really uncomfortable environment, I think, for investors. You know, typically what we've seen is that politics doesn't really have a sustained impact on markets. But in this year, we're looking at politics which could have a really meaningful impact on growth, not just in the US, but obviously globally, in fact, more importantly for global growth. And then, of course, what's happening with inflation. So this is really at the heart of a lot of the investment decisions that people are going to be making this year.
Yeah, and Justine, again, I mean, we saw a little bit of, weakness in the Canadian dollar, but this feels bigger, actually, into what it could become.
Yeah, it does feel like there's a bit of a relief today, so because maybe just Justin Trudeau's position hadn't been tenable for a while, and so there's this sense that, okay, finally, we saw the headline, we're going to see change there. But I think Canada is facing a lot of the same challenges that a lot of countries that trade with the U.S. are facing, which is that, you know, kind of with the differential in the interest rate and with kind of the tensions on the trade front. I mean, it seems like for a lot of currencies, they're headed for further weakness against the dollar. I mean, we're seeing that in China, of course. And the question is kind of, can you take that weakness?
Yeah, and Seema, again, how do you wade through all of the news? You know, I guess we watch for inflation in the U.S. I mean, we kind of, tend to forget that we had a pretty hawkish Jay Powell like 3 weeks ago. And then with Trump policies, what does it mean for where investors should be looking at?
Well, I think the obvious trade, as you were just saying, is that it's really about global growth tending to suffer, a lot of the currencies depreciating against the dollar. That suggests U.S. equities. But we also have to recognize that valuations are really, really extended at the moment. So it becomes quite a difficult discussion to take. So you do have to have some kind of global diversification, ideally focused on countries that have less trade exposure with the US, who are somewhat less vulnerable. But certainly this is the time for diversification because politics tends to throw up a lot of surprises and investors don't want to have all their eggs in one basket.
So what does that look like in terms of portfolio? Because there's also so much appetite, I think, for U.S. stocks that you're going to have much less returns if you're not attached to the U.S.
Absolutely. So you still need to have some exposure to the U.S. We are still overweight U.S. equities. We've adjusted the position within the U.S. to not just overweight some of the large caps, but also mid and small. So you're trying to get a broad exposure. But also within the equity space, looking at places like India, Japan, which tend to be a little bit less vulnerable than many other countries, Mexico, Canada, for example, even Europe. And then, of course, look, fixed income. If you have got any concerns about where growth is going, then it makes sense to have some kind of exposure to fixed income. We do think that credit will be okay. Spreads are really, really tight, but at least you're getting some kind of meaningful yields to get that carry. And then, you know, you mentioned inflation risks are still really, really present in 2025, more so, I think, than they were in 2024. So getting some exposure to real assets, whether it's commodities, real estate, that tends to be really important for this kind of environment.
Just, you know, when you look at, I guess, price valuations, it seems that U.S. stocks are priced perfection. What will give them a leg higher?
Yeah, I think a lot of people, you know, despite the higher valuations, they're pointing at the fact that the U.S. is still growing at a faster pace and the earnings are still growing at a faster pace. And to be honest, I mean, if you look at the last few years, it just feels like, you know, high valuations were never an obstacle to further gains in the U.S. But I think for a lot of people who are concerned about that part, you know, they are wondering if they should even rotate into, you know, those way cheaper small and mid caps, which really haven't really seen any outperformance in the last 10 years or so. But if we really are going to see more reshoring, more deregulation, maybe it's finally time to go to some of those smaller U.S. companies.
Simon, what do you do with fixed income?
Within fixed income, as I said, credit is still a good place to be. You know, if you don't believe there's going to be a recession, then you're not expecting defaults to spike. In which case, credit spreads should, you know, there's maybe a little bit range bound, maybe somewhat biased, slightly higher. But as long as you're getting a meaningful pickup in yield, well, that should be a good environment for credit. We still like preferred securities. Typically, you know, that exposure to financial, to utilities is important. There is some safety within there as well. So there are places within credit. U.S. Treasuries is a difficult one at the moment. You know, you want to have a little bit of duration exposure. But we were not expecting U.S. Treasury yields, at least on the long end, to trend meaningfully lower this year, despite a Fed cutting cycle.
Yeah, it's been a wild ride. Thank you both for joining us. Justina Lee and Seema Shah from Principal Asset Management. I'm losing my voice because I haven't talked for such a long time. Coming up, what a difference 4 years can make, from a riot on Capitol Hill to formally certifying Donald Trump's re-election victory. We have the latest from Washington. That's next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Now, 4 years ago, a mob attacked the U.S. Capitol as Donald Trump tried to overturn his election loss to Joe Biden in 2020. 4 years later, U.S. lawmakers will meet to formally certify Donald Trump's re-election as president after his defeat of Joe Biden late last year. Now, it's a remarkable turn of events and one that President Biden is urging Americans not to forget. Now, let's bring in Bloomberg's Jill Desis in Hong Kong and Bloomberg senior writer Stephanie Baker here in London. Jill, let's start off with you. What's expected between now and inauguration a few weeks from now?
Well, at this point, Francine, there's a couple of things in this timeline. So, tomorrow or today in the U.S. Really is when we have the voting, the certification of votes for Donald Trump to ultimately become president. This prior to the last instance of January 6, 2021, was really kind of a non-event. But obviously, given the events of that day, what we're now seeing is actually quite a lot of security sort of ramped up around this particular event at the Capitol. It's actually being designated as a special national security event, which means that the U.S. Secret Service can kind of come in and give additional resources to sort of protect the integrity of the day, make sure that people are protected. It's kind of showing that even if there's been no massive political consequences for Donald Trump, for example, but there is still sort of that lingering memory of what happened in 2021, and that's ultimately kind of moving through to this ramped up security that we have. And then obviously post that, once Donald Trump actually, is inaugurated, becomes president, there's a pretty high expectation that he may end up granting clemency to the, 1,000 or so people that have so far either been prosecuted or sort of in the process of being prosecuted for events taking place in 2021.
And Jill, if we look at policy, so House Speaker Mike Johnson survived a razor-thin vote to remain in place. What does that mean for Trump's legislative agenda?
Well, I mean, really, Francine, a huge reason why he actually ended up getting that razor-thin majority was because he received an endorsement from Trump. So one thing that House Speaker Johnson has really pledged to do is kind of get some kind of a mega bill, this, massive piece of legislation sort of through the House by May is what he is saying. And that would include, something that really touches on all of the kind of key policy tenets that Trump, touted during his campaign. A lot of that involves, some kind of funding for mass deportations, related to, a lot of the Republican concerns about illegal immigration. You've also got some pledges in there to sort of renew the Trump tax cuts of 2017, which expire this year. And then a third piece of that is to address something along the lines of either expanding or removing the debt limit. That's been something that Donald Trump has really kind of touted in recent weeks. Of course, there's a pretty big question as to whether or not, the Republicans can actually get something through there. Johnson's expecting to use some kind of a simple majority in the Senate to help the House kind of get that over the line. But there's still a bit of disagreement among Republicans about whether or not they want to do this all as one big package, if that's possible, or kind of divide it up. That's kind of what we're setting the stage for, at least in the first half of this year. We'll have to see whether the Republicans can kind of come together on that and actually get that kind of legislation through.
Jill, thank you so much. Now, we also heard, Stephanie, Elon Musk is all over UK news. There seems to be an obsession between him and politicians here in the UK. He was supporting Reform UK, then he was against Nigel Farage. He wants to be kingmaker. Is there anyone who can rein him in?
It's an extraordinary situation. You have the richest man in the world who donated more than $250 million to help get Trump elected. intervening in UK politics, attacking a British Prime Minister, Keir Starmer's role in the handling of grooming gangs as the Director of Public Prosecutions. He's made a series of false allegations about him. And then he had been supporting reform, as you say, supporting Nigel Farage. They met just 3 weeks ago, and then Musk turned on him and said he's no longer qualified to lead the Reform Party. Now, there had been, talk about Musk giving something like $100 million to Reform to kind of supercharge their efforts to sort of take over UK politics. That appears to perhaps have died because Nigel Farage now has hit back at Musk for his support of Tommy Robinson, this far-right leader who's in prison on contempt of court charges. Musk seems to be advancing this idea that Robinson is in prison because of his comments on grooming gangs, and that's not the case. He's actually in contempt of court over a libel claim about some allegations he made against a Syrian refugee. So it's just an extraordinary situation, and it's compounding problems for Starmer, a rocky first 6 months. He's expected to hit back at it today, probably without directly attacking Musk, so as to not give further oxygen to this.
But Stephanie, who does it impact actually the way people think about the UK? Is it problematic for Donald Trump? So it's definitely problematic for Keir Starmer. Does it change the way people could vote in the future?
Well, Musk obviously has a huge influence over Trump's thinking, and there could be Trump has threatened tariffs. So Keir Starmer needs to keep relations with the U.S. on track to head off those tariffs. The Labour Party has vowed to kickstart economic growth in the U.K., so U.S. tariffs on the U.K. would be disastrous for his agenda. So I think it is important. Musk is very influential, is the sort of court jester in Trump world, and they need to keep relations with him on track.
Thank you so much, Jill Deesis in Hong Kong, and our senior writer, Stephanie Baker, who also returns a little bit later this hour. We'll have plenty more to come. We'll be back with Seema Shah. We'll talk markets. That's next, and this is Bloomberg.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back, everyone. UK business confidence has dropped to its lowest level since the former Prime Minister Liz Truss's disastrous mini-budget more than 2 years ago. Well, still with us, Seema Shah from Principal Asset Management. Seema, I mean, away from the UK kind of Elon Musk saga, which we're still waiting to see how it plays out, UK business confidence, the lowest level in quite some time.
Yeah, and that's going to be a real shock, almost a disappointment to Keir Starmer and Rach Reeves. After their budget, they thought they'd done a lot of work towards increasing or improving the attractiveness of the UK. And if anything, what they've done, or at least what's happened, is that UK business confidence in response to those tax changes has plummeted. And as we talk about international investors, they're not looking at the UK in a very favourable light at the moment either.
And so what does it mean for, do you stay away from UK assets, or is there something to be played in?
Well, it's an interesting story because the fundamental picture for the UK is fairly dismal. It doesn't have at least the political instability of Europe. It doesn't have quite the negative growth trajectory of Europe, but it's still struggling. And then you have this discontent, which is growing. But on the other hand, valuations are fairly cheap, and you have actually had investors becoming really pessimistic about the UK. So with the government coming in and talking about new plans, especially in the next month or so with some announcements, if there is anything meaningful, particularly with relationship towards Europe or anything, you could see a sudden shift where sentiment is so negative at the moment. Valuations are quite cheap. It doesn't need much to attract investors, at least from an asset allocation perspective, to the UK. But it is a bit of a touch and go at the moment.
And this would be what, FTSE 100, or would you play it through other? I mean, I guess FTSE 250 means that you have a lot of exposure to UK weakness.
Right, exactly. So FTSE 100 is the general place that people are looking, at least that you have got exposure to the US, some areas of strength. But the FTSE 250 also has some potential. If you're going to see some improvement to the potential for UK fundamentals, investors start to really believe that there is a confidence story growing. There is some movement to happen there. But as I said, we are really waiting to see what the government's going to come up with.
Seema, we started the conversation saying, look, because of all the political uncertainty, especially on tariffs and trade, given Trump 2.0, you have to diversify. Where do you look for that? Because all of Europe seems to be changing because of the nature of even domestic politics, and emerging markets are still quite exposed to dollar.
It's really true. It's a very, very difficult story at the moment. We talk about global diversification, but as you look around the world, you start to struggle to see really compelling stories. Now, on a valuation map, the US is by far the most expensive, probably the most expensive it's been in history. So that is a challenge for investors. So inevitably, you look outside. Europe is really cheap, but the fundamentals are so disappointing at the moment that it's very difficult to get any kind of investor interest. The one, I guess, highlight would be that if there is some improvement, valuations are so cheap that you could get a meaningful move up. So again, it's something to watch, but at the moment, it's not somewhere that we would want to have an overweight exposure to. So in terms of where do you look, India is expensive, but the fundamental story is quite positive. It's also somewhat immune, or at least less vulnerable to US tariffs. And at the same time, as we've seen in the last few years, any kind of disappointment in China, you start to see those flows moving to India. So vulnerability for China continues to be a positive story for India. So that's one area that we are continuing to look at. And then for Japan, where valuations are probably around historical averages, those corporate reforms continue. It's also less vulnerable to US tariffs.
Seema, thank you so much. Seema Shah there, Chief Global Strategist at Principal Asset Management. Coming up, Austria's far-right leader gets a chance to form a government. We'll have the latest next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The Canadian Prime Minister, Justin Trudeau, is reported to be planning to resign as early as today, following months of pressure within his party. As the U.S. prepares to certify Donald Trump's election win, we ask what his return to the White House means for world politics. Plus, Austria is on the verge of a government led by the far right after centrist parties tried and failed to form a coalition. Now let's stay with that story. And Austria's anti-immigrant Freedom Party is creeping closer to appointing its first chancellor after receiving an invitation by the nation's president to discuss forming a government. Now, the development comes after efforts to form a centrist coalition collapsed and the conservative chancellor, Karl Nehammer, resigned. Let's get more with Bloomberg's Oliver Crook. Ollie, good morning. So what's the latest we're hearing from Vienna?
Yeah, Francine. So listen, this is a really interesting sort of political saga that really began in September. So this has been going on for a very long time. And over that course of time, they basically failed to form a government. So the number one party, the party that actually won that election, was the far right, the Freedom Party, Mr. Kickl, who was iced out from any political negotiations. So wasn't really given a mandate to try to form a government or to become chancellor because, like in many countries across Europe, the far right has been isolated, and basically there is a firewall that prevents any of the mainstream parties to agree to go into coalition. That led ways to very difficult coalition discussions with the center-right, the center-left, and the liberals, which over the weekend collapsed, leading to the chancellor, the sort of incumbent who was trying to form this government, basically resigning not only as chancellor, but also as the head of the party. What that now leaves in Austria is the possibility initially of potentially a new election, but what seems now to be the more likely outcome is that basically that the leader of the far-right movement will be given an audience with the president today at 11 a.m. and will be potentially able to form a government with the new head of the Conservative Party, who has sort of softened on this position. And if, Francine, this sounds at all familiar to you, this is exactly the same movie that we are seeing play out across France, across the Netherlands, and increasingly across Germany, where basically these mainstream parties are trying to form alliances in order to block out the far right, and basically are coming to a point now where they're finding the resistance and the sort of limit to that political approach. We see it in France with Le Pen. We're seeing it increasingly in Germany with the AfD, which is going to be very hard to form a government if they have 20% of the vote. And add to it, Francine, another final dimension which unifies all of these stories: very slow growth within Europe, and as a consequence, very difficult budgets and a lot of money missing in order to try to bring these governments together and bring sort of political cohesion to what is increasingly looking like a paralyzed Europe.
But, Ollie, so is this Musk's influence with money that's re-energizing the right and the far right in Europe?
So what I think is very interesting, Francine, is that the other sort of dimension that is becoming increasingly universal is Musk's influence and his sort of weighing in on politics. I mean, it is now the #1 story politically in Germany is Musk's influence over what is going on in Germany. We have heard from him. We have had him endorse the AfD. On Thursday, he will hold a sort of Twitter X space with Alice Weidel, who is the head of the AfD party, hoping to use some of the sort of techniques that were very successful in the U.S. election around podcasting, you know, the Rogan effect, potentially trying to boost the AfD. What is interesting about this technique and this approach is, of course, the political establishment, the mainstream within Germany, very, very concerned. We heard from Olaf Scholz speaking again over the weekend saying that Germany is governed by the will of its citizens and not by the erratic statements of a billionaire from the United States. But the AfD, for their part, we've reached out to them, the far right, and this is what they had to say. I think this is very interesting, Francine. In view of Musk's outstanding role in the coming Trump administration, we also believe it is important for the German-American relations if the AfD, a significant political force, can build diplomatic bridges. So they are saying here, not only is Musk helpful because of his influence online, but also his credibility as a businessman to help give the AfD a bit of credibility. They see this as a direct line into influence over the next Trump White House. Very, very interesting, particularly since the AfD has been so critical in the past about American influence on European politics, American influence within Germany, but really seemingly not having such an issue when it is in their support. And of course, also one of their chapters in Brandenburg is standing against the Tesla factory that Elon Musk has there. So it's a really sort of interesting story to see how it'll develop, and I'm sure that a lot of people will watch that conversation between Elon Musk and Alice Weidel on Thursday evening.
Yeah, they certainly will. Ollie, thanks so much. Ollie Crook there with the very latest, of course, on Austria, but the wider effect of Elon Musk on Europe. Now, for more on the influence of Elon Musk and President-elect Donald Trump, with just 2 weeks until inauguration, let's bring in Tina Fordham, founder of Fordham Global Foresight, and Bloomberg senior writer Stephanie Baker. So, Stephanie, thank you so much for coming back on. Tina, Happy New Year. You have a risk map, basically, in saying, like, the chaos theory. I mean, there's a lot of things that could be strange in the next couple of weeks. What are you expecting in terms of policies from Donald Trump day one?
Well, there's what Trump has said he will do on day one, and then what he is able to do using executive authority, what he needs congressional support to achieve, and there we know he's got a very slim majority in the House, and many Republicans actually are thinking about midterms in 2 years, so they may not fall into line. And then there are the measures he's suggested, which will run into problems in the courts. So if we look at market sentiment, all the good stuff is expected to take place. It's all good for equities, and that's quite positive. And there's a very good mood at the start of the year. But as we wrote over the weekend, there's been a violent start to 2025. There are a huge number of moving pieces and wild cards. No one foresaw the implosion of Syria, for example, the resignation of Justin Trudeau that's expected. You just had this segment on right-wing populists. The fact that these developments are not very well understood or very quantifiable basically means that they're getting left out of the risk analysis.
What are you watching out for, Stephanie? Because there is a lot going on, and I guess as Tina's saying, some of it is not quantifiable.
No, it's not. I mean, you're looking at Trump having an effect across the world without even entering the White House. Of course, since I wrote a book called Punishing Putin about the economic war against Russia, I'm very much focused on what Trump might do to bring about a ceasefire in Ukraine. You see the Biden administration rolling out tougher sanctions to put Ukraine in the best possible negotiating position when Trump comes in. You see Russia incurring huge casualties, trying to gain minimal amounts of territory in Ukraine. Meanwhile, the Ukrainians, during their incursion in Kursk, have launched another offensive to retake territory that they have lost since that incursion began in August. Once again, to put themselves in the best possible negotiating position when Trump comes into office. I'm quite skeptical that Trump can do a deal. I think Putin's goals haven't really changed. I think Putin wants some respite from sanctions, so the increased sanctions gives Trump leverage, actually, to do a deal. But I think there's just so many moving parts, and Trump is having such an outsized effect without even taking office.
Yep.
We were talking before, Stephanie, about Elon Musk really weighing in on UK politics. I mean, he also came up with a peace plan for Ukraine. Do we know what that relationship between Elon Musk and Donald Trump means going forward for also Russia?
Well, Musk was in the room for some of his, discussions with the Ukrainian leader Zelensky, but I think that the Ukraine peace talks, there's so many different moving parts that need to be resolved. Trump's pick, his special envoy for Ukraine, Keith Kellogg, has said reassuringly that it would be a disaster if Ukraine lost the war. But trying to come up with some kind of workable peace plan that involves giving some kind of security assurances to Ukraine, and that's the buzzword I heard in D.C. last month, the security assurances, not guarantees. Is that going to be enough to stop the fighting? Or is it going to be a repeat of 2014 and 2015, where the Minsk agreements stopped sort of the outright conflict, but Russia comes back to take another bite at the cherry later in the year? So I think it really depends on the degree to which Trump can kind of put pressure on Zelensky. And do a deal with Putin. And perhaps I think he's probably going to offer him some kind of limited sanctions relief to try to get him to the table.
Tina, in your 2025 Outlook Global Risk Map, you have Israel, Gaza, you have Iran. You also have a section on EU cohesion. Is that going to splinter?
Well, this is the risk. I mean, Euro pessimism is very much the order of the day. I am a little bit more constructive, I think, than most when it comes to that, because here in Europe we are most exposed to what happens between Russia and Ukraine. The undersea cable cutting over the Christmas period was another reminder of what we warn about in terms of gray zone operations. The question is whether Europe can get its act together, and this means getting through German elections. We're optimistic that Friedrich Merz will be the next chancellor. The Musk effect, in my view, is a little bit overdone when it comes to Germany. We really don't see any movement in the polls since Musk's poorly received op-ed and his interventions. But then, of course, there's France to be concerned about. Italy, for its part, doing very well with
they're signing deals in
Musk.
Mar-a-Lago.
Yes, and she's got the upper hand. But we have to be really careful about geopolitical kind of behavioral risk. We've got behavioral economics. Now we need to worry about how to deal with narcissists when it comes to geopolitics. And what I mean by that is you're only ever as good as the last thing you did for them.
I mean, does China have it, the worse off?
Does China have
the worse off in terms of tariffs and trade, or is that already priced in?
Well, China is going to. This is what I think is really important in this period. As Stephanie said, Ukraine's trying to improve its negotiating position. China and others that will be on the sharp end of sanctions, but especially China, are going to try to signal their strength and their resolve. They're not just going to sit around and wait for Trump to hit them with sanctions.
Stephanie, internally, so there's a lot of expectations in terms of regulation. The stocks are expected to go even higher, but then there's all, I guess, the worrying signs of, for example, pardoning the rioters of January 6th. Is that going to change American politics from within?
Yeah, it's very interesting because Trump's popularity within the Republican Party is at an all-time high. He has transformed the Republican Party over the past 8 years. But this issue of, his potential pardoning of the January 6th attackers is a deeply unpopular move. So I think it remains to be seen how that plays out. I think he'll likely ride that out without too much opposition. It's extraordinary how he's changed the narrative about what happened on January 6th. From a violent attack on the Capitol where people died, and he's now calling it a day of love. And I think it shows his use of disinformation and his ability to manipulate the narrative is just extraordinary. So I think he'll be able to get away with pardoning those January 6th attackers without too much political blowback.
Tina, again, in your great charts, you talk about the wild cards. And what do the wild cards, because you have everything else in here. I mean, there's like German election, energy security, populism, China slowdown, Taiwan tensions, you know, inflation, tariffs, regulation. What should we worry about that we're not taking account?
I think it's important when we look at that chart, right? What we've done is map out the existing risk factors in the context of the economic and market backdrop, and the extent to which the Trump effect is an accelerant of existing weaknesses. And I think, for example, the quicker collapse of governments and resignations that we're seeing, that's more likely in Europe because we have a parliamentary system in many countries. And so you have coalitions which can collapse and call early elections. So I think a wave of early elections is likely as governments struggle to deal with greater demands for defense spending, as well as how to deal with tariffs and changes in global trade. That is one of the key risk factors for me.
And Stephanie, I mean, we're still trying to figure out a lot of the people in the administration. So Marco Rubio at State, Scott Bessent at Treasury. Will they be independent, or actually will Donald Trump do all policy?
Well, he has picked loyalists to be in his cabinet this time around. And I think he has a better understanding of the way Washington works. I think there'll probably be less turnover and churn within the Trump orbit this time around. But, you know, it's very hard to predict. As Tina mentioned, he is mercurial. We don't really know how he'll react to certain events, but he is on the same page as Marco Rubio. I think he wants Scott Bessent in charge of Treasury because he is well-liked by the markets. But how far he's able to push his tariff agenda, I think, you know, Scott Bessent has maybe perhaps been a little bit more cautious about how they use tariffs. That could be a point of division down the line.
Great. Thank you both for joining us. Tina Fordham, a founder of Fordham Global Foresight, and Bloomberg senior writer Stephanie Baker, with a book out that came out 4 months ago called, of course, Punishing Putin. And now coming up, Italy is reportedly in talks with SpaceX for a deal to provide secure telecoms for the government. So we'll have the details on that Bloomberg scoop next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Now, Bloomberg understands that Italy is in advanced talks with SpaceX for a deal to provide secure telecoms for the government. Let's bring in Bloomberg's Southern Europe managing editor, Tommaso Ebhardt. Tommaso, first of all, congratulations to you and the team, because that's a pretty significant scoop. What do we know about the deal being discussed?
So we know that the discussions are ongoing between the Italian government and the Starlink, SpaceX division for the satellite network, because Italy is looking to find a secure way to keep its communication, also for its defense industry. We know that talks have been going on for a while. Clearly now, after Meloni's trip during the weekend to meet Trump, it looks like talks are real advanced. So it's quite interesting development on that front, and also shows once again how Elon Musk is influencing the Italian business arena, and the connection between the Meloni's government and the new administration are getting quite close.
So, Tommy, what's been the reaction in Italy?
I have to say that the story is today on the front page of main Italian newspaper, because the Meloni's trip to meet Trump was a real surprise. And, you know, we broke the news as soon as she came back that these talks have been going on. For sure, we know that talks have been going on for months, so it's not a consequence of her trip, but clearly the fact that Italy has been discussing for a while to get Starlink contract with Starlink is quite interesting. That we are talking about the communication of the military system in the country. We know that Italy have been looking for a while to find a secure system for its communication. The alternative to Starlink, according to our report, are much more expensive. We're talking about 10 billion euros. So it looks like Musk's satellite division could be a good solution also in terms of expenses for the Italian government.
And the Italian Prime Minister, Tommy, Giorgia Meloni, flew to Florida to meet President-elect Donald Trump at the weekend. What do we know about the meeting? And was that really the winning kind of extra thing that made him look at this deal?
It's quite interesting about the meeting that it was a real surprise. Italian newspaper reported that not all the government was aware that Meloni was going to meet Trump over the weekend. And then obviously this shows once again how Giorgia Meloni is becoming pivotal in the European landscape. You know, as odd as it seems for someone as you and me who are, you know, have both Italian roots, Italy seems to be one of the more stable countries in Europe nowadays, and it's becoming an important, Rome is becoming an important place for the U.S. government. Also, it's interesting to know that Joe Biden, the President Joe Biden, is coming to Rome in the next few days for his last overseas trip to meet, obviously, the Pope, but also to meet Meloni.
So interesting. Tommy, thank you so much. Tommaso Ebhardt there, Bloomberg's Southern Europe managing editor. Now, coming up, the world's largest maker of iPhones beats expectations on strong AI demand. We have the latest on Hon Hai next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back, everyone. Now, European chip shares are higher following a rally in U.S. peers on Friday. Microsoft's commitment to invest further in data centers also hands a potential boost to companies helping to build cutting-edge AI chips. Now, meanwhile, Hon Hai, the world's largest maker of Apple iPhones, reported better-than-expected revenue growth on stronger demand for AI. Let's also look at what Apple's doing pre-market, getting some 0.7%. Now, let's bring in Bloomberg's Tom McKenzie. Tom, there's so much going on in AI that's kind of like flying through the roof when it comes to a lot of these chip makers, but break down the number for us and how much of this demand is really coming from AI.
Yeah, and we're constantly looking for those litmus tests and those companies that can tell a broader story. And Hon Hai, or Foxconn as it was formerly known as well, is certainly one of those companies. The revenue growth in the most recent quarter then, in the last 3 months, $65 billion US. $65 billion US. Just in the month of December, revenues increased more than 40%. And as you said, a lot of that was coming down to the sale of the data center servers that go into these AI data centers, to the point where Hon Hai actually thinks the revenues they get from the cloud business that includes the servers will match that of iPhones, which typically has been the greatest revenue driver for Hon Hai historically. They think that happens in 2025. Goldman Sachs has looked at these numbers and said they're going to raise their expectations in terms of earnings for Hon Hai, not just for 2025, but for the 2 years following as well. So Goldman Sachs, a positive reading from them on the earnings. Citi coming out with a view that maybe the stock could be challenged in weeks going forward because the outlook for the current quarter a little softer than some had expected. But broadly, it reminds us that demand for the hardware, for the infrastructure underpinning AI is still there.
And Tom, there's also an amazing big take actually today out with a conversation with Sam Altman. What do we find out?
This is an absolutely fascinating read. Look, Sam Altman does give interviews, increasingly rarely, but none that I've seen recently that have this much color. And it goes all the way back to the founding of the business back in 2014, through, of course, that momentous weekend, November of 2023, when he was ousted as the CEO, to the current day and his views into the future as well. Some of the standout points: he thinks artificial general intelligence, or AGI, human-like intelligence, he thinks that will come about under the presidency of Donald Trump. Not because of Trump, just in that time frame, in the next 4 years. He donated, by the way, $1 million of his own money to the inauguration front of Trump. He says, look, there are some things I disagree with him on, some things I agree with. This isn't political. It's about having a relationship when that technology comes to bear. So those are some of the key standouts. He also thinks on the energy front, he thinks nuclear fusion will solve that conundrum for AI.
It is so interesting. Everyone should go and read our big take from today. Tom, thank you so much. Tom McKenzie there with the very latest on Hon Hai and Sam Altman. Up next, Bloomberg Brief, Danny Berger and Manus Krani in New York. Happy Monday, everyone. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is did you take the tumor out? And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The job's not done yet. Fed officials say the fight to tame inflation isn't over, ahead of JOLTS, jobs, and minutes. Mounting pressure from multiple reports that Canada's Prime Minister Trudeau is likely to announce his resignation this week. And all in one, House Speaker Johnson vows an ambitious bill to deliver President-elect Trump's policy priorities. Good morning, Manus.
Danny, good morning. He lives to reign another day. We'll talk politics in just a moment. Stocks a bid this morning. You've got NVIDIA up. You've got all of the tech stocks rallying. We've snapped 5 days of consecutive declines that wiped $1 trillion off U.S. equities. Manufacturing's at a 9-month high. The Mag 7 had a nice buy-the-dip moment on Friday, rallying by 2.5%. Evercore say we're at an inflection point in automation for the golden age. We'll talk more about that in a moment. The bond markets are settling in for $119 billion worth of auctions this week. 3s, 10s, and 30s. 30-year paper, by the way, has made it to the highest level since November 2023. And there's a trifecta of Fed speak, Danny, isn't there? From Barkin, Daly, and Kugler, all really hesitant to say the job is done. Stay restricted for now from Barkin. So we're also keeping an eye on a couple of other stocks for you. These are some of the names that are in the frame Monday morning. ASML rallying after his US peers gain. This also comes as Microsoft's commitment to invest further on data centers also hands a potential boost to the companies.
We also see shares of Boeing. Those are rising in the pre-market, 1.8%. Barclays has upgraded it to overweight from equal weight. They've turned positive on the stock for the first time since 2019.
That almost deserves a clarion call. Paycheck is in advanced talks to acquire Paycor. It's the smaller rival in the payroll processing. A deal may be announced as soon as this week. That's according to people familiar with the matter. And in just a few moments, we line up the week ahead with Sonia Martin of DZ Bank, and later in the hour, Stephanie Guild of Robinhood on the markets. Danny, good morning.
Good morning, Manus. The first kind of full week of the year. Of course, we do have a Thursday pause in equity trading to remember President Carter. But besides that, we're basically back in action.
Back together, back in action, and I think it's going to be, I actually think it's going to be much more about FX. The question is this, I was watching Stephen Major over the weekend, and also you look at Ned Davis, and they're both talking about exceptionalism. Exceptionalism may be being fully priced in. The rates market by Stephen Major, but of course, policy. Policy in the first wave of the second Trump administration is going to define the trajectory for a lot of these markets.
We've built this consensus that the year ahead is going to be euro-dollar parity.
Yep.
It's going to be higher equity, something like 7,000, and higher rates. Can those three things all exist at once? Are we going to have a moment where FX volatility or higher rate volatility means that risk can't continue on as it has been?
Well, there's got to be some kind of an inflection point. We've had people come in that don't want to be that brave and say rates are going to be 4% to 5%. There's a coalescing of the willing at around 4.6, 4.7%. Equities, can they really get to 6,800, 6,700 if you break towards 5? What is it that breaks you towards 5% in bond yields? That's the big question for us.
Mike Wilson says no of Morgan Stanley, out with a note this morning saying that the most important variable to watch in early 2025 is the correlation of bonds and equities, that now that rates are back above 4.5%, that negative correlation has returned.
Well, we've got a lot of different questions to put to various people. I think the one thing just on that, Danny, when it comes to how healthy is the consumer, Torsten Slok has 10 charts. You've got to read through his note. It's about credit card as a share of disposable income, and it's also the effective mortgage rate. You got it. We're paying around 4% in this country when really mortgage rates are up at around 7%. So it's about the strength of the consumer 2025.
Well, when it comes to the Fed, Manus, this is also going to be a big variable. How many cuts will we get? We got Fed speak on Friday. Let's just go through what they said. We heard from Barkin saying that they will stay restrictive for longer. Mary Daly saying inflation is still uncomfortably above our target. Adriana Kugler saying the job is not done, reiterating what we had seen from the Fed in their December decision. Joining us now is Sonia Martin, head of FX and monetary policy at DZ Bank. Sonia, what do you make of the Fed speak? It doesn't sound like this is a Fed who's going to be jumping into cuts in 2025.
Well, yes. I mean, it's a difficult start into the year for the Fed and for all of us because we have a big unknown in the equation. In 2 weeks' time, Donald Trump will take office. And to be honest, none of us really know what's going to happen afterwards. I mean, he's been talking the talk, it's been very threatening behavior in terms of, the threat of tariffs. And that's going to be obviously crucial for the Fed. But ultimately, none of us, possibly even not himself, know exactly what will happen once he takes office. And as far as the Fed's concerned, the big unknown and the big risk factor are the tariffs. If Trump does impose high tariffs early on in his presidency, that is going to impact inflation, and that's going to close the window for rate cuts. And that's the problem that the Fed has right now. So they're flying blind, as most of us are, and we'll kind of have to wait and see what happens when he takes office. And maybe we'll get an idea in the weeks after that what he plans to do first.
Sonia, good morning to you. 2017 saw the dollar drop by nearly 10%. I'm rounding a little bit aggressively there, 9.8%. The world was very different. The capital flows are very, very different in 2025 to 2017. Is there some kind of a toleration, or what is it that Trump wants to achieve in terms of the dollar? Does he come in day one, jawbony, this is too high? Because 2017 gave you a 10% drop. I can't see that landscape for a 10% drop this year. Can you?
No, absolutely not. 2017 was very different because when you look at 2017, we had, Trump's presidency was very erratic. People were just getting used to the whole new Trump era. The optimism of the early days had sort of dissipated. But crucially, I think, when you look at euro dollar in particular, then we had a fairly strong euro, which was able to compete against the dollar and actually outperform it. That's not going to be the case this year. I mean, we're looking at a weak euro. So even if the dollar does begin to struggle later on in the year, which it may well do, given that, the growth burst once Trump takes office is going to be short-lived. There's going to be concerns about debt levels, etc. But none of that will matter too much to the dollar if everyone else is looking weak or even weaker. So this might be a race to the bottom.
And many other economies would welcome weaker currencies if they are going to face tariffs and want to get out of weaker growth. Sonia, we've just seen this spat already of intervention even before Trump has come into the office. You have the Philippines last month vowing to stepping in to support their FX market. Indonesia vowing the same. Brazil spending billions guarding the real. The PBOC trying to find that anchor for the yuan. To what degree is central bank policy in 2025 about being defensive? What is the balance to strike about letting the currency weaken but not letting it do so unduly?
Well, this is going to be a very fine and very difficult balancing act. If you look at Europe, for example, I mean, euro dollar is now, it's not a parity, but let's face it, it's fairly close to parity. And we're starting to have a discussion here as well about the damage that a weak euro can do. I mean, even when you look at Germany's export-oriented economy, you'd think that a weak currency is a good thing, but of course it has downsides. It brings imported inflation, and a too weak currency does more damage than it does any good. So obviously, a number of countries are in that position. Defending your currency, however, against a fundamentally established trend is really, really difficult, if not impossible. So, you know, there's a limit to what central banks can do. And if you're going to enter that arena and fight that fight, you better make very sure that you have a chance of winning it. Because if you intervene and the currency keeps weakening, you know, really you're going to have a massive loss of credibility. So it's a really risky game to play for those central banks.
Well, we saw a little bit of that this morning, a way to sort of trying to jawbone the yen, but it really having the opposite impact. In other words, yen dropping. So the credibility of jawboning is dissipating. Let's delve into the euro a little bit more deeply. We've had various people say to Danny and I, if we do make it to parity and below parity, it would be a short-lived shock. It'll be deeply undervalued at that juncture. Would you concur with that? Or do the politics, the disaggregation of politics in Germany, in Austria, and in France mean that we stay sub-parity for longer than normal?
I kind of tend to agree with the assessment that, you know, while we are bound to go to parity, and if we do, then obviously we will go below, I am also not convinced that we'll, you know, see massive sub-parity levels for prolonged periods of time. Mainly because I just feel that, you know, at this point in time, a lot of the negative news for Europe are priced in. A lot of the positive optimism with regard to the US economy in the first Trump, you know, months is priced in. So to me, it just seems there's going to be a limit to how much further we can go. I mean, how much are these factors going to still be able to drive euro dollar lower, because at some point, you know, the surprise momentum is gone and it's just, you know, business as usual. So while I imagine euro dollar is going to stay at low levels, you know, I'm also not a big fan of these sort of massive sub-parity expectations that some people are currently talking about.
You also have the factor of weather, Sonia, and it's come back into the fore because you have no longer natural gas coming from Russia into the rest of Europe. You have a cold spell. I know it's not quite cold there yet in Frankfurt, but I think by the end of the week, you're going to get below freezing like we have here in New York. It's a US and European phenomenon with really this cold snap expected. To what degree could we have an energy-led inflation reemerge in much of the developed market?
Well, obviously, it is a major risk factor. And as you said, it is very much a weather-dependent phenomenon. And, you know, we have a different energy supply situation than we had, you know, before the war in Ukraine. So that is a risk factor. And of course, when you look at Europe, to make it worse, as I said before, we have a weak euro. And that means that energy costs for us are even higher because you have the combination of higher energy costs per se, in addition to the currency effect. You know, energy usually is paid in dollars, not in euros. So we have that double whammy. And I think that is definitely something the ECB is going to have to keep an eye on, because obviously they're on the path to cut rates quite aggressively still from here and to move into slightly expansionary territory. But obviously, if we do get, you know, an effect from the inflation side, and may that be due to temporary factors, then that will have to be taken into consideration. It could force the ECB to take a pause at some point in the cycle.
Yeah, well, as we're talking about potential for parity, I'm just looking at the euro dollar up 0.6% this morning. So it's doing everything in the different direction to the conversation that we're having. Sonia, thank you so much for setting the tone this morning, this Monday morning. Sonia Martin there at DZ Bank. There are other stories trending on your Bloomberg terminal. Let's get you through them. China has reaffirmed its support for the yuan after its slide last week. Fan speculation that policymakers would allow it to depreciate faster. Despite the PBOC's efforts, investors remain bearish on the yuan, with many predicting it will weaken in the coming months due to a sluggish economy and the potential increase in U.S. tariffs.
Meanwhile, as you mentioned, Manus, BOJ Governor Ueda reiterating that he will raise the benchmark rate. The economy continues to improve this year. BOJ watchers have been looking for clues on whether the central bank will raise rates either this month or in March. That uncertainty and a continuing strength from the U.S. dollar has kept the yen relatively weak.
Shares in Asia liquor and beer makers, they're declining. The U.S. Surgeon General outlined a direct link between alcohol consumption and heightened cancer risk, calling for warning labels. However, if there are regulatory changes, it may take years to come into effect.
That was on the news literally everywhere this weekend, right after your post-holiday season. Okay, coming up, Canadian Prime Minister Justin Trudeau expected to resign. We're going to have more on that report from the Globe and Mail coming up on your Bloomberg Brief.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It is Bloomberg Brief. I'm Menace Cranny alongside Danny Berger here in New York. Canada's Globe and the Mail are reporting that Prime Minister Justin Trudeau is expected to announce his resignation as the Liberal Party leader this week, triggering a contest to replace him. Let's bring in Stephanie Baker for more. Stephanie, so this is brewing. Trudeau has been in purdah almost from the press since before Christmas. You know, he is running out of support like snow off a ditch at the end of winter, isn't he?
He's been under pressure for months, but the pressure really began to build after his finance minister, Chrystia Freeland, resigned 3 weeks ago, saying they had differences over policy, both how to respond to the cost of living crisis, as well as how to respond to Trump's threat of tariffs on Canada. And I think that only caused more Liberal MPs to turn against him and call him to resign. You know, his popularity rating has sunk precipitously since he was first elected. But the real question, I think, is how does he respond to these Trump tariffs? And I think people are questioning whether or not he's the right person to take on Trump, given the threats that the incoming U.S. leader has made against Canada.
We see the Loonie rallying today, Stephanie, on this idea that maybe you do get someone who can better take on Trump. Meanwhile, you have across the world, a lot of this is happening. In Austria, coalition talks falling apart, the coalition government likely leading the way to someone from the far right coming into the government. Canada, Austria, elsewhere, are these governments that are essentially shifting in positions that are either more Trump-friendly or ones that can better take on Donald Trump?
Right. It's part of a trend of incumbents losing power and leaving office. And I think Trudeau is another casualty of that. It's also another sign of how Trump is having an outsized effect around the world without even entering the White House. And I think, you know, the thing to watch in Canada is who potentially takes over for Trudeau as the leader of the Liberal Party. Is it, as many suspect, Mark Carney, the former Bank of Canada and Bank of England governor, who who has been apparently making calls to various Liberal MPs, trying to figure out if he can launch a campaign. He is not as charismatic of a political leader, but he does have the kind of economic credentials that you might want to take on and respond to Trump's threat of tariffs against Canada.
Stephanie, thank you so much. That is Bloomberg's Stephanie Baker. And we would just remind viewers as well that Mark Carney is the chair of Bloomberg Inc.'s board of directors. Now, meanwhile, more geopolitics, more relations to Donald Trump. Italian Prime Minister Giorgia Meloni flew to Florida to Mar-a-Lago to meet with the president-elect over the weekend. And it comes ahead of President Biden's last overseas mission as a president to Rome, where Meloni is expected to host him. Let's bring in Bloomberg's managing editor for Southern Europe, Tommaso Ebhart. Tommaso, Meloni going to Mar-a-Lago, already talking with Elon Musk, saying that they're going to host some sort of interview on X. Is this the relationship that the White House will have? Is it Meloni serving as kind of the ambassador to the wider Europe and the interaction that we're likely to see between the two nations?
It's quite interesting to see, the Italian Prime Minister going on a surprise dinner with Trump in the U.S. over the weekend. She went to meet Trump, and then she came back to Rome in about, less than 20 hours. This caught by surprise, I would say, everyone in Italy, including some members of her government, according to Italian media. What is clear is that Giorgia Meloni is cementing his role as one of the more stable European leaders. This is something that Italy is not used to, and actually is becoming now something solid. Meloni's government is one of the more stable in Europe, and is looking that she could become a cornerstone of the European relation with the new U.S. administration. The trip over the weekend clearly made the case.
Well, it's very clear that the world is trying to understand who to connect with in Europe. Macron and Olaf Scholz are somewhat debilitated. I mean, this is the Mutual Admiration Society between Meloni and Musk. Corriere della Sera, Meloni calling Musk a genius. On Meloni, Musk calls her authentic, honest, truthful. Tell me this, how do people in Italy look at this relationship? How do they look at this deal that's being done with Starlink on the government's securitized communication? What's the feeling there in terms of this transatlantic mutual admiration society?
So we have to say that today, the news that Italy is in talks with Starlink for a satellite connection contract in Italy is on the front page of every Italian media, and is being looking differently from the party, the Meloni's party, and the opposition leaders. The opposition leader are asking Meloni to come to parliament and say if there is any special relation with Elon Musk, which could have consequences on contract for the public administration. What we reported, our scoop from last night, is that the Italian government has been in talks for months now to get a system to have a secure connection for its defense industry, and Starlink seems to be the cheaper and the most secure one. We wrote last night that any other deal for the Italian military service would cost around 10 billion euros, while the Elon Musk one could cost 1.5 billion. So it could be much cheaper for the Italian administration. Then clearly the fact that the news comes out soon after Meloni come back from the US could be could not be just a coincidence.
Well, certainly Italy's going to have to do a little bit more when it comes to defense spending. They're still a little bit short on that U.S. ambition for everybody in terms of their contribution. Tommaso, thank you very much. Our Southern Europe managing editor, Tommaso Ebhart, there on the very latest trip of Giorgia Meloni to Mar-a-Lago on Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Monday morning, time for your front pages from around the world. This is what's making headlines for you. First up, Washington Post leads with a winter storm. It's going to affect several states across the country. The worst of the weather will be over the mid-Atlantic. Now, the mayor of Washington, D.C. has declared a weather emergency through to at least Tuesday.
Nat gas prices up some 8% this morning. Next up, the New York Times. If you stayed up late last night, apologies to you, but it probably meant that you got the Golden Globes. Amelia Perez and The Brutalist winning the top film prizes for comedy and drama at the Golden Globes. In the TV category, Hacks won Best Comedy Series, and Manus, again, it was Shogun that basically won everything.
Yeah, I mean, it really did sweep the boards. We'll see what the Oscars have on March the 2nd, who's in there. Tilda Swinton did well last night as well, saw that movie. Let's talk about what's on the front of Bloomberg. New York City kicking off its congestion pricing after years of delays and political wrangling. The new toll began just after midnight on Sunday, with today being the big test for commuters. Now, it is just gone 5:25 a.m. This hoping to raise $15 billion for the MTA. That is Lexington and 3rd Avenue. Thankfully, 5 cars have come into the shot since we came back from commercial break. But this is about raising money, $15 billion, Danny, and about reducing congestion. Will they go the way of London? That's the question I have.
Hey, I'm all for the subway getting better, but we already pay so much in city taxes in New York, and the subway hasn't gotten better. And by the way, if you're commuting into the city from New Jersey or anywhere else, you're already paying a really hefty toll charge for the bridges and tunnels. I mean, you can pay more than $20 trying to get into the city.
And the bridges and tunnels fees are actually going up as well. But now, I'll leave it to an American to criticize whether the subway system is actually not that good. In London, it was launched in 2003. It was $8. It's now $18. Although congestion is down and bicycling is up by 137%.
That's inflation for you. The Fed's maybe got a hike. I don't know.
I know.
you are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The job's not done yet. Fed officials say the fight to tame inflation isn't over. Ahead of jolts, jobs and minutes. Mounting pressure from multiple reports that Canada's Prime Minister Trudeau is likely to announce his resignation this week. And all in one, House Speaker Johnson vows an ambitious bill to deliver President-elect Trump's policy priorities. Danny, good morning. These markets are really trying to find their feet this morning.
Yeah, it's maybe the unofficial start of the year with so many people off last week. With the Mag 7 leading the declines in the days prior, 5 days of losing. That was snapped on Friday. It is yet again tech that reverses things, leads us higher. NASDAQ 100 futures up 0.7%. Bond yields, those have been moving higher. You had strong data coming in on Friday. The move continues today. Your 10-year yield decisively above 4.5 or at 4.6%. 30-year yields at 4.83%. That is now the highest level since November of 2023. Lots of Fed speak, Barkin, Daly, Kugler, all saying relatively the same thing, that inflation's uncomfortably high, Manus, and we know the job is not done.
Yeah, they want to stay restricted for longer. That's according to Barkin. Those bond markets are up. 10-year yields are at the highest since April the 30th. Last year, and 30-year paper, that's where the real worry is, because that says to you people are worried about tariffs, they are worried about a de-anchoring of inflation, or a resurgence, let's say, of inflation, or not making the last mile down to 2.
Yeah, and lots of supply. Look, the bond auctions that we've had more recently have gone off without a hitch. You mentioned we're going to have more this week. At what point does it finally turn? Do we get more nervous about the supply coming in with all of the spending and the lack of fiscal restraint that we expect from Washington, D.C.?
Yeah, you're going to get 3s, 10s, and 30s. You're going to get $119 billion worth of paper. And then you have a tilt in the Fed as well. You've got this pivot, this slight pivot in the Fed composition in terms of doves to hawks. You're going to move from 4 over to 5, and the neutrals move from 3 to 5. So there is a tilt in there as well.
Well, that's why I'm so interested for minutes, because remember, last Fed decision, we did have a dissent. And you have had more Fed speakers putting the emphasis not on the labor market that we saw in 2024, but instead 2025 is one so far where the focus is on inflation.
Well, let's have a look at the S&P 500. December was a bit rocky. We gave back 1.7%. It was a pullback. It was the 5th worst December, actually, in 35 years. We seem to have found our feet at the start of this trading week. We've broken trend on those 5 consecutive declines. Our guest this morning is Stephanie Guild, Head of Investment Strategy over at Robinhood. Stephanie, good morning. Happy New Year.
Happy New Year.
We have this collective bullish consensus. Take your choice. 6,500 up to 7,100. Who did we say 7,100 was? Oppenheimer at 7,100. Yeah. That is a pretty incredible consensus of bullishness. can that live, as Danny said, can that coexist with bond yields at 4.6, 4.75%? That's a tough one to square, isn't it?
It's tough for valuations, for sure. There's three things I think that matter all the time, no matter what's happening. And that is sentiment, to be sure, valuation, and earnings growth. And I think a lot of it will depend on earnings growth then. Like, can you have the earnings growth that outperforms a stubborn interest rate environment? And that's why, but I do worry about the sentiment. Like last year, this time, you had actually a wide range of estimates that even some were negative for the year, and they all had to play catch up. And this year, they're all starting out bullish. And that's why my target is on the lowest end of that range. It's at 6,500 for the year. I just want to see where things go too. I think this is that environment where you have a transition in the administration and you just have to see what their policies are going to be.
Well, there's this hope for strong growth and that margins can keep expanding because you get deregulation, because you get tax cuts. But if those things also lead to higher rates for longer, which becomes the more important driver for equity markets?
In the short term, it will be interest rates. In the longer term, it will be growth. And if you can get it, great. And I actually think there's a good possibility for it, which is why I still have a positive view. And it's why I'm more bullish, perhaps, on mid-caps because of better valuations there. But it's something for sure to watch. I think we've seen the worst of the 10-year move for now. But there's certainly risk for higher. In my outlook, I put 5%.
It was interesting that we see Speaker Johnson retain the gavel. We'll talk more about that politically later. But it now looks as if they're going to go potentially for one massive bill, energy, defense, and tax. Now, that comes with a huge political reward if they manage to get it through. But it also has huge risk to this market. How dependent are we on that one-stop shop bill with tax cuts coming through, sort of unabated?
I mean, I don't know how they're going to get huge tax cuts done, especially in the corporate side. Like the last time, it was 35% or something, 34%?
Down to 21.
Down to 21. How do you make it much lower? We're right in the middle of the pack globally. You could improve it a bit, but where are you going to get the funds from? We have a deficit of close to $2 trillion. Of the money we spend, 4 of the 6 trillion that we spend come from Social Security, Medicare, and Medicaid. They've come out and said they're not going to touch that. How? Then we're playing with tiny little peanuts, in my opinion.
Yeah, and then it's the weird thing of you get tax cuts, but there are exceptions depending on where you build your products.
And it's always over 10 years and not fixing anything in the media. And you do have the bond vigilantes are back out again, like they were in the 80s, right? And interest as a percentage of GDP is, interest payments, I should say, as a percentage of GDP are back to the levels when the bond vigilantes were out.
Do you think the bond vigilantes can actually have an impact this time? Is this a Congress? Is this a President Trump who will be swayed by machinations in the bond market?
Margins are thin in terms of, decision makers. And if you thought about the last time, this bill they tried to push through to move the debt ceiling, they tried to actually put the debt ceiling, on hold basically for 2 years, and they couldn't get it done because of the bond vigilantes. So I think it's possible that there is a faction that tries to defend our budget.
Well, it's going to be interesting because Steve Rasciuto joined us and he chided me. He said, the bond vigilantes, they don't exist anymore. It's not the 1980s, man. It's not the 1990s, the last time that you were butchered by the bond vigilantes.
I think it matters again. I really
See, this is
do.
interesting. So you think the bond market will be the tail that wags the dog here?
From a macro perspective. But from a micro perspective, I still think there's a lot of opportunity, and I don't want anyone to forget that.
I don't, and I get that. Can I just square away then?
Yeah.
So can the Mag 7 coexist in this slightly higher regime of rates? Because we are pretty much there. Their earnings are going to grow by, 18%, down from 34%, but that still puts them in pole position.
Yeah, I mean, if you look at the top 10, like their earnings expectations for 2026 are only 6%. So I actually think like they're not overvalued when I look at it from that perspective, and they do have a lot of, they dominate everything. Yeah. So they absolutely can continue. But I also know if you look like even in 2024, there were 140 names that did met or beat the S&P 500. Like there's more to life than the Mag 7. And you saw them in the top 10 returns this year, right? Like United Airlines.
There's more to life than Mag 7.
I'll sell it.
United Airlines was in the top 10 returns. Like, who would have guessed that?
It's such a strange place to be in, Stephanie. And I hear it in what you're saying, and I hear it in other people, that you can still be really positive and even bullish, but still have some, negativity in the back of your mind.
Yes. You have to be so careful this year.
But the other narrative that has been part of this year that everyone seems to be consensus on is one of U.S. exceptionalism. Yeah. But if the rest of the world is facing political instability, is potentially facing currency volatility, at some point, does that come back around to U.S. assets? Is it a zero-sum game that the U.S. is going to do well as long as everything else does bad?
It depends, right? Because if you have higher interest rate here, then that means we're kind of exporting inflation. Like you have all these things that just like continue to help us and hurt other countries. But I actually think Japan, for example, is a place that I'm still positive on, despite the fact that it's had some rough goings from the currency.
Is this the equity market you're positive on in Japan?
Yes,
Why is that?
Market. I just think that they were left for a long time for good reason, right? And everyone, we said during the break, everyone always plans for the last disaster. And I still think there's a lot of good coming from there. Yes, they have demographics against them, but I really think a lot of the secular policies they put in place, even during Abe, will continue to help them.
You also have Warren Buffett on your side, which is not a bad place to be. Hey, Stephanie, thank you so much for joining in the new year. Happy New Year to you. Stephanie Guild of Robinhood. Okay, let's get to some of the other top stories that are trending on your terminal this morning. China has reaffirmed its support for the yuan after it slid last week. That had fanned speculation that policymakers would allow it to depreciate faster. Now, despite the PBOC's efforts, investors are bearish on the yuan. Many predict it will weaken further in the coming months with the sluggish economy and potential American tariffs.
And the BOJ governor, as we were just saying there, Ueda, reiterating that he will raise the benchmark rate if the economy continues to improve this year. This comes as the BOJ watches see clues as to whether the central bank will raise rates this month or March. Now, the uncertainty has kept the yen at a relatively weak level, and it's actually declining on the back of those comments from Ueda this morning.
Meanwhile, Steve Diggle, a former hedge fund manager who made billions back in 2008, he is ready to pounce on volatility again and bet on market swings. He sees threats to market stability. He cited factors like the stretched U.S. stock valuations, prime office glut, and geopolitical tensions, all in an interview with Bloomberg. Highly recommend you give that a read. Coming up on the show, after nearly 12 years, Canadian Prime Minister Justin Trudeau is expected to resign. We're going to have more on that report for you next. This is Bloomberg.
Day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
About artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Canadian Prime Minister Justin Trudeau is expected to announce his resignation as Liberal Party leader this week. That's according to multiple reports. Let's bring in Bloomberg's Stephanie Baker for more. Stephanie, how likely is it that Trudeau is out?
Well, that's what the reports are saying. I mean, he has been under pressure for months by his party to step down, but that pressure only intensified 3 weeks ago when his finance minister, Chrystia Freeland, surprised everyone and quit, saying that they had policy differences, in particular over how to respond to the cost of living crisis, as well as the threat of tariffs against Canada from Donald Trump. If he does resign, this really would be an end of an era. It would be another sign of this anti-incumbent wave that we've seen over the past year. Trudeau has been prime minister for almost a decade, and I think the question is who will replace him as leader of the Liberal Party. There has been talk of the former Bank of Canada and Bank of England Governor Mark Carney taking over, and some believing that he has the economic credentials to respond to the threat of Trump tariffs more effectively.
Well, in terms of the leadership, it would look and sound as if Trudeau does not have the support. I mean, multiple caucuses, Ontario, Quebec, and Atlantic. The question is Canada ready to have somebody like Mark Carney, who's a non-politico at the moment, step into that fray?
Yeah, and this is the real question. Is this the time for a sort of technocratic leader like Mark Carney, who has the sort of business savvy that might be needed at this time, given the threat of tariffs from Trump? Canada is at a crossroads. It's facing an election later this year. The Conservatives are expected to win that election, and can whoever they accept to lead the Liberal Party, can they mount a challenge to keep in power? That remains to be seen.
Yeah, and we should note to our viewers that Mark Carney is the chair of Bloomberg Inc. Stephanie, and just to clarify, and maybe even correct what I said earlier, that Justin Trudeau has been head of his party for more than 12 years. He's been prime minister for about 9 years. It is a big change to have him step down, and in reaction somewhat to Trump, who hasn't even come into office yet. This is something we're seeing around the world. What moment is this for global leadership? Is there a political vacuum right now as the decks are reshuffled?
Right, I think, you're right, Trump is having this outsized effect around the world without even entering the White House. But the economic threat, for Canada is huge if Trump goes ahead and imposes a 25% tariff on all goods from Canada. Now, Chrystia Freeland, before she stepped down, she had said she wanted to keep the fiscal powder dry to respond to the Trump tariffs, and I think there was a division over how to do that with Trudeau. And I think that will be an enduring debate within Canada as to how most effectively to respond to the threat of Trump tariffs and how they can head those off.
Okay, Stephanie, thank you very much. You're right, it is going to be a year where perhaps a few more incumbent heads will roll. Stephanie Baker there for Bloomberg. Mark Carney is, as Danny just said, the Bloomberg board, the chair of Bloomberg's board of directors. Let's shift focus to Washington. The House Speaker there, Mike Johnson, fresh from his re-election as he turned to Trump's agenda. Johnson told Fox News that Congress would get one big bill to vote on by April, which addressed the president-elect's priorities. Let's take a listen.
Beginning immediately, we, as you said, indicated there, we gathered all the House Republicans together yesterday and had a full day of work. We went to Fort McNair, which is a short drive in Maryland, and everyone was enclosed together for 8 or 9 hours straight talking about our reconciliation agenda and the America First agenda. We're 15 days out from the inauguration of President Donald J. Trump for his second term, and we want to make sure that we're jump-starting the agenda now over the next 2 weeks so that he's prepared and ready on day one.
Well, let's catch up with Meghan Crane. She's in Washington for us. Meghan, look, this is Johnson retaining control. This is the Republicans finally uniting. The question is, how long does that endure? One big bill. The reason for pivoting to one big bill rather than splitting this in two across the year, is it because they're concerned about political capital running out over the period of the first 8 months of this new administration?
Good morning. I'm not sure it's about political capital more than just the ability of Mike Johnson to herd cats and get enough of his members to support a single bill. Obviously, any legislation requires compromise, and there are members of the House Republican caucus that are not particularly interested in that. And that, was evidenced by the fact that it was difficult for Johnson to even be reelected speaker, which is essentially a pro forma thing, or normally has been. So I think there's a lot of calculation going on there. Primarily, really the effort to get something through the House.
Meghan, just to that point, by passing things or attempting to pass it up in one, does that mean that policy takes longer to pass or it comes quicker? I know Lindsey Graham was upset about this idea that you wouldn't get some of the things like energy and border up front, that you have to wait for it all to be in one go. What does that mean for the timeline, for the order that things are passed in this Congress?
Right. So that's a really interesting sort of part of the calculation. I think they're maybe concerned that Donald Trump will become impatient with this timeline. If you're talking about things, one big bill is going to take months regardless. Speaker Johnson spoke about April, and that's a long time if you're trying to sort of come in with a lot of momentum like Trump will be. I think it just goes to the fact that there are things that will be easy to pass, but they want to tie them into things that are not so easy to pass. And that's just how the legislative process works. The Senate wanted at least 2 bills, and Johnson clearly doesn't think he can get those through.
No, it looks as if they're going to go through a reconciliation, which is a simple majority in the Senate, rather than have to rely on those Democrats. Look, today's incredibly important and significant for a number of reasons, but Congress counts and certifies the results of the Electoral College votes. So what should we look out for today in terms of politics in the House?
Well, today is one of those Washington things that is very important, but most people didn't notice until 4 years ago. The certification of the election results. Kamala Harris will oversee that process and has certainly made clear that she will certify those election results. The politics of it are sort of unpleasant all around. The Republicans don't want to talk about what happened 4 years ago on January 6th, and the Democrats are more than happy to highlight that. But things will proceed today as they have for hundreds of years, and we'll just sort of move forward. The real question then will come in 2 weeks, see what the president-elect does about pardoning people who participated in the insurrection on January 6th into 2020.
Meghan, thank you very much. Meghan Crane in Washington. It's going to be a big week, both in terms of economics and politics, as Meghan was just saying there now. Some of the big economic data and the Fed minutes will be across the slate throughout the week.
And we want to bring you some live pictures of the late former president, U.S. President Jimmy Carter, laying in state in Atlanta, Georgia. He's at the center, the Carter Presidential Center. He will remain there until Tuesday, January 7th at 6 a.m. local time as we observe the funeral of the Nobel Peace Prize winning former President Jimmy Carter.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger, Manus Cranny in New York. Let's get you set up for your trading week this week. The latest Fed minutes, those will be coming out on Wednesday with one dissent in the last decision. Then equity markets, they will be closed in the U.S. on Thursday for National Day of Mourning for the late former president, Jimmy Carter. Bond markets will also be closing early that day. Then the December jobs report, that comes out on Friday. Manus, that is delayed by a week because you have the holiday shortened week last week.
Indeed, 160,000 is the number that we're looking at there. Some stocks that you want to keep an eye on, Danny, as we go into the trading session. You've got ASML rallying after the U.S. peers really gain. And a lot of the tech stocks are rallying this morning. Mag 7 was up over 2.6% on Friday. Boeing is up over 2%. We've got a bit of an upgrade for them. Let's have a look at, keep an eye on that. You've got Paycheck also there as well. The upgrade from Barclays, by the way, to overweight. And Paycheck, let's just round it off with that. Advanced talks to acquire Paycor, which is a smaller rival in the payroll processing business, Danny. So those are three names just to keep abreast of.
Let's also get a check on this bond market, Manus, because it is also on the move. Yields are going higher, above 4.6% for your 10-year. For your 30-year yield, that is the highest level since November of 2023. You had a lot of strong data on Friday, whether it be PMIs, whether you get better jobless claims, all of that, meaning that this is a strong economy. This is not a labor market that's set to crack, and it is a Fed that has been concentrating on inflation over the labor market.
Yeah, and just on that data on Friday, manufacturing at a 9-month high, orders at an 11-month high, and you potentially have this tariff narrative coming from the next administration. We've got $119 billion worth of bond auctions coming in 3s, 10s, and 30s, and it's very much at that longer end of the curve that we've seen perhaps a little bit more of a dislocation in yield. But Barkin says stay restricted for longer. The three of them, Barkin, Daly, and Kugler, all with that hint of, let's say, hawkishness.
Yeah, Daly's saying that inflation is uncomfortably above our target. Kugler talking that we know the job is not yet done. This is a Fed that does reflect what we got in December, a hawkish pivot from the Fed. Already this is a bond market that's pricing in 2 cuts. Do we price out more? Is there more pain to come? Because we don't even know what policy is going to look like yet. There's so many unknowns.
And that takes us back to Stephanie Guild from Robinhood. She said the bond vigilantes are in the wings. They are alive. They can reassert themselves. And that's your problem for stocks. Surveillance is up next.
in 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
We just experienced one of the best 2-year stretches for markets in history.
All the positive news is priced in.
It's hard for me to be negative U.S. equities.
The U.S. growth situation is in pretty good shape.
I'm looking for a bumpy year, and a lot of those bumps are going to be occurring over the next few months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Monday, looking to build on Friday's gains with equity futures on the S&P 500 higher by 0.4%, on the Nasdaq 100 up by 0.7%. Check out the bond market and have a little look at the long end of the curve. The 30-year yield in America hitting the highest level since 2023, up a single basis point to 4.83. Going into a major week ahead with tons of economic data, concluding with payrolls on Friday. Before we get to payrolls on Friday, though, we need to talk about some debt auctions in America. Carrying just a little bit of weight this week, $119 billion of debt sales, a 3-year today, Bramo, a 10-year tomorrow, and a 30-year on Wednesday.
Yeah, brought forward because of Thursday, the holiday in terms, or the day off for Jimmy Carter's funeral. A real question here about what the signal from the yield rise is. Is it the anticipation of $119 billion of debt sales? Is it the anticipation of an agenda from President-elect Donald Trump who potentially could deepen the deficit? Or is this a signal of just normalization that's positive because we should have a disinverted yield curve?
Well, I think it tees up the perfect conversation that we've got to have this morning. Speaker Johnson looking to hit the ground running. One big, powerful bill and looking to pass that bill by April.
They want to get this one big reconciliation bill out of the gate. There's been lots of oohing and ahhing on this program between Republicans within the House and the Senate, how they would go about enacting President-elect Trump's agenda. Would they do one immigration bill out of the gate, as Senator John Thune wanted to do? Or are they going to do what Jason Smith of House Ways and Means has been pushing, one massive reconciliation bill? President Trump made it very clear yesterday in a post. One powerful bill, immigration, energy, and expanding tax cut. He made a point to talk about no tax on tips.
Basically, all of this is coming down to the question around deficit anxiety. And ultimately, from a market perspective, there is a real anxiety right now about how much momentum they have to actually do cost cutting to offset some of the deficit expansion that a lot of people at this point are just penciling in.
Morgan Stanley's Mike Wilson talking about this morning to kick off the week in his notes, saying that rates are the most important variable to watch, that in early 25 already we're seeing the correlation expectation of equity returns to bond yields decisively negative. We heard from Priya Misra of JP Morgan last week talking about this, reflecting on what Max Kettner of HSBC had to say, that rates have decisively moved into what he believes is the danger zone.
There is an alternative. I mean, if you just think about it from an investment perspective, and then you take a look at some of the areas that people say have been the cheapest, they are the most leveraged to rates remaining low. A key question here as we move forward is today is actually a great test. Can you eke out gains at the same time that the 30-year yield's at the highest level going back to November 2023, when you have a yield curve that is the most positive from 30-year to 2-year going back to 2022?
Bonds down, yields up this morning by a single basis point on a 30-year, up by close to 2 on 10s, 461 on a 10-year yield. Coming up this hour, we'll catch up with Lori Calvasina of RBC on her favourite sectors for the year ahead. Terry Haynes of Pangea Policy as Johnson pursues Trump's agenda, and Jane Foley of Rabobank as the dollar pulls back from 2-year highs. We begin this hour with stocks rising after snapping a 5-day losing streak on Friday, getting a boost from big tech. Lori Calvasina of RBC keeping a close eye on the sector, writing, "We remain market weight, S&P 500 tech, our favourite S&P 500 sectors heading into 25, are financials and energy, along with communication services." Lori joins us now for more. Lori, good to see you.
Good to see you too.
Good morning. Let's talk about the year ahead, and not just the sectors. Let's talk about policy. Have we got a better idea of what policy and how it will be pursued will look like down in Washington, D.C.?
I don't think we have it yet. I think that we're optimistic we're going to get some clarity soon. And, you know, chatting with Emery earlier about the one big powerful bill, I instantly thought back to my European meetings in December, right before the holidays, when I was kind of doing the death march across the continent. And, you know, in every single meeting, people wanted to talk about taxes and tariffs and what exactly is Trump going to do and when are we going to know? And, you know, I had to sit there and tell them, well, I think we got to get past the inauguration first. But if you go back to 2018 or actually 2017, what I remember about that tax bill, I'd moved firms and I was trying to put out a forecast, and I kept having to change my earnings estimate because the tax rate kept changing. I think like literally up until like the week they passed the bill, and it was driving me absolutely mad. So I kept coming back to that anecdote. But the reality is markets did price in a lot of the good stuff ahead of time anyway. So I think just the promise of getting some clarity sooner rather than later, and frankly, just ripping off the Band-Aid, right, and getting a lot of this stuff done all at once, I think that's good for markets. I think one of my core beliefs about politics and markets, whatever it is, you have to go through some temporary repricings, and those can be painful for the markets. In some instances, those can be painful for certain sectors. Sometimes they're not. Sometimes they're good. But whatever it is, it tends to be rather short term. The market reprices, and then you move on.
Something we talked about last week coming into this week, and you mentioned 2017. Do you believe we're coming into something that looks like 2017, or something that looks like 2018, or something very different?
I think it's a combination. You know, I think there's some rhyming and some echoing that's going on. But what I do remember about 2017, again, was that we didn't even know what the tax rate was going to be for corporations, and we managed to price it in ahead of time anyway. And, you know, if you look back at sort of that big move we had over the summer when the market started to sniff out the Trump victory into the November highs, you know, I think markets were kind of baking in a lot of the good stuff, right? And maybe a lot of the challenging stuff still needs to be filtered in. And in the prior, you know, administration, right, Trump version 1 was kind of the good stuff in 2017 and the challenging stuff in 2018. And I think that's all been kind of pulled forward. But there was sequencing, and maybe we're just not going to do that same sequencing. We're just going to do it all at once, and the market can have a better picture of how it all fits together. And then we can move on to whatever's next. But I do think, you know, yeah, there's some rhyming, but I just do think the timeline is a bit different in here.
My head's kind of spinning. It always is when I talk about potential policy, especially at a time of incredible volatility and some contradictory messages. I wonder how much policy is going to drive the returns outlook versus the bottoms-up estimates that you're looking at in terms of earnings from companies that have seen a really good period but seem to be facing a bit more of a challenge.
You know, I always say when we're in these periods, my head's twisted into a pretzel, and I definitely felt like that a little bit at the end of the fourth quarter. But I think you're right. I think it's all about the transmission mechanism to earnings. And what are some of those other transmission mechanisms, right? One is the tax rate, right? And even though it seems, you know, maybe kind of artificial, right, investors will still cue off what the actual earnings are. Another transmission mechanism, right, is going to be the read-through to the vibes. Corporate sentiment, investor sentiment, looking at things like the Michigan consumer survey that's coming out later this week.
So I think those things all show up in the earnings at the end of the day. But I do think, kind of going back to that interest rate conversation earlier, I think that's another transmission mechanism that matters a great deal. And I kind of agree with the danger zone comment. I mean, I don't think we're quite there yet, but I think 5% is a problem for this equity market if we get there.
This is where I wanted to go. This question of how much policy and some of the more stimulative aspects are going to be the driver versus this. Strong dollar, higher yields. Yeah. The strong dollar already reducing some of the international presence of companies. How much is this being accounted for, and how much do you think that this market is really at the precipice of a bigger decline if we do reach that danger zone?
So if you just want to take the dollar, for example, it's been something curious happening recently, which is we've only kind of recently started to see downward revisions to bottom-up consensus estimates. And normally when you're in this big period of dollar appreciation, you would have seen that a bit earlier. And it's starting to show up in my data now. So I think we're going to have to work through that. I think that's temporary. I don't think that derails the market as a whole. But I do think if we see the 5% on the 10-year Treasury yield, what I'm seeing in my earnings yield gap modeling right now is that if we hit that 5% number, we're going to flip the earnings yield gap into a range that's typically followed by equity market declines on a 12-month forward basis. So we can sort of hang out in 4.6, 4.8, but if we hit that 5% and you don't see a big improvement in the earnings yield, it's going to be signaling a problem. And I think the other problem with 5% is, look, I'm not a technician, I'm not a rate strategist, I just look at the charts, right? And if we break through that 5%, I think I'm going to have a lot of equity investors saying, are we in a structurally rising rate environment, which will be a tremendously different thing than any of us have really seen in our careers. We're sort of chopping around right now, but most of my career we've been in the structurally declining environment, and I think that's where the muscle memory is.
We've got to talk about tariffs as well. This breaking from the Washington Post just now. I'll share the lead paragraph with you. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter.
So what this says to me is that this is going to be a more narrow-looking approach when it comes to the tariff regime. And further down in the story, they talk about things that are critical to national or economic security. So Lori, when you see stories like that, you start to get some color around what this tariffs could mean. And yesterday in Trump's tweet about the one powerful bill, he said all will be made up with tariffs. Yeah. Is that enough to pay for this?
I don't know. And look, I think they're trying to do this right through the reconciliation process. So, and I'm a little fuzzy on how all that works. But I think that sort of reduces, right, what they can ultimately do in terms of tax cuts, because they've got to make everything balance out. So, I think on the one hand, the markets will cheer a narrower approach to tariffs, more targeted. There's been a real concern over the last 6 weeks or so that the market has not been baking in a broad-based kind of tariff approach. On the other hand, are you really going to get, anything much more than a renewal of existing tax cuts, right? Is it keeping tax rates low, or is it getting a bunch of new cuts? How are you going to get a bunch of new cuts if you don't have a lot of new revenue coming in?
When you look at how potentially tariffs might impact earnings, what sectors do you think would be the best in terms of making sure that they're the ones that are less vulnerable to potentially some of the retaliation we could see in the tariff space?
It's going to depend on what's on that list at the end of the day. But if you look back at 2018, the 2 sectors that really got smoked were industrials and materials. And so I've actually been sort of debating the industrials. There's a lot of enthusiasm on industrials in the States, not so much in Europe and Canada. And I think when I've talked to some of the domestically based investors, they've assumed that this whole reshoring is going to benefit especially small and mid-cap industrials. And I'm like, well, let's just hold up. We're trading at 3 standard deviations on valuations, and we're also looking at a sector that was really at the epicenter of these tariff issues the last time around. Defensives did best last time, right? It was things like healthcare, consumer staples, utilities, REITs. REITs and utilities came up a lot in my European meetings because they just don't seem affected either way.
Well, speaking of Europe, headlines like these will open the door to have conversations about whether this allows people to think about international equities just a little bit more. The fear ahead of these headlines was a universal tariff as high as 20% on everything that America was importing. Lisa, when you see headlines like this and then look at foreign exchange, just a bit more euro strength, just a bit more strength in the Mexican peso. It's marginal stuff, but it starts a conversation.
Well, it starts a conversation about what the purpose of tariffs will be. Will it be to sort of jawbone or give some sort of increasing momentum to the American exceptionalism story, or will it be very targeted for either national security reasons? These are key issues like critical supplies like steel, iron, aluminum, copper, syringes, needles, batteries, rare minerals. There's a real question here about if these are targeted to national security and specific needs, they won't have as big of an effect on Europe, because strategically, it would make sense that they would not necessarily be as included in some of these.
Two things also come to mind. How much pushback will there actually be from Democrats? Because this has been their whole approach as well, especially when you think about going after China. It needs to be narrow, needs to be specific. Also, is this because the Trump incoming administration is concerned about higher inflation? So they want to take a more targeted, slow-going approach when it comes to tariffs.
We should stress that no decision has ultimately been made. This is the latest reporting from the Washington Post. Laurie, it's good to see you, to catch up on a whole range of things going into the next year and beyond. Laurie Calvert, senior there of RBC. If you are just joining us, this from the Washington Post just minutes ago. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country, so universal tariff, but only cover critical imports. That's according to 3 people familiar with the matter. More on that a little bit later. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Staying in D.C., Congress is set to meet today to certify President-elect Donald Trump's election win. President Biden invited a group of new Democratic lawmakers to the White House last night, urging them to commit a peaceful transfer of power. As Trump prepares to return to the White House in 2 weeks, expectations are high that he will give swift clemency for the 1,000+ people convicted and hundreds more with pending cases related to January 6, 2021's insurrection. Meanwhile, in Canada, Prime Minister Justin Trudeau is said to be preparing his announcement to resign. The Globe and Mail newspaper says the announcement could come as early as today. It would trigger a race for the party leadership, with the winner becoming PM. Trudeau has been under pressure from lawmakers in his party to quit for months. Scrutiny grew last month after his finance minister, Chrystia Freeland, quit. People familiar say that Italy is in talks with Elon Musk's SpaceX for a $1.6 billion deal, providing encrypted telecoms for the government over the next 5 years. The negotiations appeared to move forward after the Prime Minister, Giorgia Meloni, met with Donald Trump at Mar-a-Lago. Some Italian officials, though, are concerned about the deal's impact on local carriers. It has, though, been approved by Italy's Intelligence Services and Defense Ministry. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, one big, beautiful bill.
President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. We're targeting a vote in the House maybe in the first week of April.
That conversation up next, live from New York City this morning. Good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg.
exchange waking up to some headlines already Monday morning. Check it out. Euro-dollar session highs approaching 104 all over again, 103.89. That's some euro strength, and that's rare over the past month or so. Check out dollar peso. Some Mexican peso strength as well in the mix. Dollar Mex near session lows. We're negative about 0.5%. So once again, a stronger peso, a weaker dollar. All of this building in the last 10 minutes or so off the back of this headline from the Washington Post. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter. Now, no final decision has been made, but certainly some early murmurings that maybe some of the campaign promises might be, I stress might be, watered down.
There was a lot of preparation for an opening salvo that would be potentially pretty big and potentially pretty damaging should it go through in terms of huge tariffs on the likes of Mexico, on Europe, and of course on China. The fact that the opening salvo is targeted is definitely sending a signal that's being heard in foreign exchange.
A warm welcome to 2025, because this move can be undone just like that by a single post from the incoming president. So stay tuned. Under surveillance this morning, one big, beautiful bill.
We're 15 days out from the inauguration of President Donald J. Trump for his second term, and we want to make sure that we're jump-starting the agenda now over the next 2 weeks so that he's prepared and ready on day one. President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. Reconciliation is the way to get it done. Why? Because you avoid a 60-vote threshold in the Senate. We're targeting a vote in the House, it may be in the first week of April.
So here's the latest this morning. House Speaker Mike Johnson laying out an aggressive plan to pursue President-elect Donald Trump's agenda. House Republicans aiming to pack his priorities into a single bill and pass it by April. President-elect Donald Trump posting this: Republicans must unite and quickly deliver these historic victories for the American people. Get smart, get tough, and send the bill to my desk to sign as soon as possible. Terry Haynes of Pangea Policy joins us now for more. Terry, on this bill, how big is it going to be and how quickly can they pass it?
The short answer, John, is I have no idea, and it's going to take a really long time to figure that out. Markets, I know, are slavering for clarity. I wrote a lot about that yesterday, but I would urge people not to engage in premature clarity on this, generally speaking. Speaker Johnson is doing exactly what he has to do. The market signal is from Washington is we're serious. We're going to work on this as hard and as quickly as possible. That's all very good. The political signal is that the House always overcooks everything. So what you want to do is kind of overreach, and then you get pulled back in by the Senate a little bit. Number one. Number two, what Johnson's doing is engaging in the care and feeding of the other branch of government here, the executive branch. Trump just helped him become speaker again with a minimum of fuss. It behooves him for political and policy reasons, both to try to get as much as possible, as quickly as possible, and also agree with Trump right now. The reality is that Johnson doesn't have everybody in the House on the one big beautiful bill strategy, and more importantly, he doesn't have the Senate at all. So we're a long way away from determining what's actually going to happen.
Terry, over the weekend, Senator Thune, Senator Lindsey Graham, we're still all talking about one bill coming out almost immediately on immigration and then doing taxes. So are you saying that markets need to be prepared for potentially going back to 2 reconciliation paths?
Yeah, I am. I'm fundamentally what I'm saying is that the path here is not at all decided, and it's not all going to be decided for quite a long time. I've tried to summarize the politics and the market signals in my last answer. Here, what I would say is they've got a lot of barriers to jump over before they get to the size of the one big beautiful bill. You've got debt ceiling, debt limit that they need to decide upon. Trump has to provide a budget. You've got a situation where you've got to figure out then the size of the deficit. And markets, frankly, are going to have a role to play here, as you all were talking about earlier, and Bloomberg is reporting the way that the way markets are reacting to increased deficits and the like, particularly in the bond side. may result in pulling back some of the more extreme wishes of Johnson and the like.
I want to put two of these stories together. One, where Trump came out in black and white and said about this one powerful bill. He said it'll all be made up with tariffs. And then this morning, we get a story from the Washington Post talking about tariffs that look to be more narrow in nature. How are they going to pay for all of this if they're more narrow in nature, focused on national and economic security concerns?
Well, the answer is they don't know. And, what I can tell you is that another thing for markets here is that, 2017 is not like 2025 for Washington or for anybody else. This is obvious on one level, but it affects the size of additional deficit. It affects like how many pay-fors they're going to have and what they are, and all those decisions are months away. So the idea, Johnson, I think, is exactly right in trying to be as clear for markets and politically as possible. But at the same time, all these hurdles and markets' reaction to how these folks get over these hurdles is going to determine a lot of the size of the tax cuts and exactly what they decide to do. The last thing I would say about this is that Trump is going to ramp up defense and defense industrial base spending and supports, and that's going to have a piece to play here too.
I am wondering, just to build on what Anne-Marie was talking about, your take on this headline from the Washington Post about universal tariff plans with one key change, the key change being that it only goes after certain key imports, including things like steel, iron, aluminum, copper, syringes, as well as batteries and rare earth minerals. Do you think that this is a sign that this administration is going to take a more targeted approach with potentially national security in consideration more than, say, 100% tariffs on everybody unless they come and kiss the ring?
I think it's another sign of that, Lisa. My view of this all along, watching these folks closely and what they do and what they say, has been that, markets have veered back and forth between saying this is all negotiation versus, the tariffs will be all about application. The answer is it's not going to be one or the other. It's going to be a mix of both. It's going to depend on, kind of which products, and it's going to depend on which countries. And I think you can vector it out from there.
Terry, good to hear from you, sir. Busy morning already. Terry Haynes there of Pangea Policy. Check out Euro Dollar, a move of more than 1 full percentage point now. Back through 104 on the euro. Could be, possibly, the biggest one-day move for the euro going back to the summer of last year. Off the back of this headline from the Washington Post, the consideration, at least, of watering things down a touch.
Yeah, watering things down and going after key supplies, most of which come from China. And let's be very clear, this is not the type of imports. The U.S. isn't importing a dramatic amount of syringes from Germany. This isn't a question of that. This is coming from China, so it's going after a very targeted group, basically alleviating some of the concerns that Europe had.
One thing that's very clear to me this morning, whether or not it's the Washington Post reporting or what Terry Haynes just said, the markets will have a voice in the policy that this incoming administration dictates, whether it's not those concerns about tariffs or whether or not it's how big they can really squeeze into this one or two packages of reconciliation and how willing they are to add to the fiscal deficit.
This is why so many people have come on the show going into 2025 saying brace for volatility. Everything we're talking about right now can be undone with a single post from the incoming president of the United States. And we should stress repeatedly, every time we reference this story from the Washington Post, that no final decision has been made. It speaks to considerations taking place within the Trump administration as they go into power over the next several weeks. And Lisa, things can change very quickly in the next several seconds when the president wakes up.
It's the point that Stuart Kaiser has made that you referenced earlier. Are we heading into 2017, which was a low volatility, big risk asset gain? Or are we heading into 2018, which was high volatility, low returns?
More on this story in just a moment. Up next on the program, Leland Miller of the China Beige from New York. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No one does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I didn't really. Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Snapped a 5-day winning streak, or rather a 5-day losing streak on the S&P in Friday's session, and we look to add some weight to it this morning. On the S&P, we're up by 0.6%. On the Nasdaq 100, up by 1 full percentage point. On the Russell, up by 0.7. Some moves in the bond market to talk about. On a 30-year yield, up by a single basis point or so. A 30-year yield now, the highest, going all the way back to late 23. We're through 480. Just a range of commentary coming from the south side on all of this, including this from Mizuho's Jordan Rochester this morning. US data surprises may have finally stopped falling after strong claims in ISM manufacturing last week. Combine that with Trump's fiscal plans, it's why 5% is more likely than 4% on US 10s. Right now, the 10-year just south of 460, 459. We've got to talk about trade and foreign exchange. This headline coming from the Washington Post just moments ago, that President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter. Off the back of this, look at this move in foreign exchange. Up by 1% on euro dollar, 104. Some strength for the Mexican peso, likewise for the Chinese currency. Big headline 30 minutes ago.
It's a big headline, and you rightly point out the volatility that this introduces. If this headline is what actually is going to come to pass, then it is a slightly dollar negative, but really a positive for the rest of the world, particularly Europe and Mexico. If this is just some of the noise that we can expect to hear, it really speaks to the question of how much volatility some of these headlines are going to really introduce.
And it's true and smart and prudent to talk about the fact that this could just be noise. These conversations are happening in Palm Beach right now, and they will continue to happen. And President-elect is just that, President-elect. He will take office in 2 weeks' time, and then potentially we'll see exactly what the policies will be. But what this is signaling to the market is that those ideas of blanket tariffs that ring around the United States, potentially that's out the window, and this will be a more targeted approach.
Let's see. Let's see what the incoming president's got to say. As far as this market is concerned, inauguration took place in early November. Equities are up. Bond yields are a little bit higher at the long end, and the dollar's a touch weaker on the session so far. Under surveillance this morning, the Globe and Mail reporting Canadian Prime Minister Justin Trudeau is likely to step down this week. The resignation expected to happen before a key National Caucus meeting on Wednesday. This coming after months of pressure from his own Liberal Party to resign. His party 20 points behind Conservative.